fractionally lower, actually off of its lows of earlier today. The NASDAQ still under quite a bit of pressure. We have a number of big stock movers on our radar this morning. That includes Apple, one of the things weighing on the NASDAQ, actually. The EU's top court ruling that the tech giant must pay more than $14 billion in back taxes, stemming from a 2016 ruling that ordered Ireland to recover back taxes from the company. Shares of Apple this morning have been under pressure all morning long, down just about 1% or more throughout the morning. The court also upholding EU regulators' $2.7 billion fine against Alphabet over anti-competitive practices. You can see those shares down about 0.25%. On the other side, we're looking at shares of Oracle jumping after reporting a better-than-expected quarterly profit, also noting that AI demand continues to help its cloud business. Shares of Oracle up just about 9%. And big banks also in focus. On a report, the largest U.S. lenders will be facing a 9% increase in capital requirements. However, that's nearly half of an original proposal. Let's get much more on the broader markets and bring in Katerina Simonetti, Senior VP and Wealth Advisor at Morgan Stanley Private Wealth Management. Good morning. Good to see you.
Good morning. Thank you for having me on the show.
What do you make of the action that we're seeing in the pre-market with futures? We saw futures a bit mixed around 5 a.m. and since then taking a move to the downside.
Well, this market likes keeping us on our toes, and it was very nice to see the rally and see some of the nice levels being revisited. But the fact is that this is an extremely volatile market, and we have the Fed change in the Fed strategy that is about to start, within the next week. We also have the election on the horizon. And the geopolitical tension that we're still facing in the world. So investors are very aware of it, and they're looking at their portfolios that have performed very well for them for the last couple of years, coupled with the fact that we have been in the high interest rate environment. And this is the time where they're a little nervous.
I want to see how you see today shaping up. Maybe it's changed with the moves in the futures, but what's your WEX word of the day?
My word of the day is divided. I think that this market is extremely divided, and it's
so is the country
for investors because they're looking at their portfolios, and they could not help but fall in love with some of these high-flying tech names that performed so well in their portfolios. Plus, the fact that we were able to get such high yields on cash and short-term deposits. And going forward, it's going to be a very different picture. So we need to change the strategy. What we tell our clients is to focus on quality, focus on defensive plays, go into sectors like financials, healthcare, industrials, consumer staples, look at the individual stocks with strong cash flows, competitive positioning, something that is going to get us through this volatile time.
Katerina, it's interesting. You're saying go to defenses as we're going into a Fed rate cut. Isn't that kind of contrary to the traditional philosophy that you want to go into cyclicals?
Well, you're making a great point, but it all depends on the perspective. And the perspective is that, this volatility and what we're facing within the next couple of months, is very temporary. And we need to have a long-term view of the markets. And once the rate cuts start, once we, go into some of the cyclical plays that work really well in this environment, there's also a larger picture of the sectors that historically do well, at the later stages.
I want to get to your pick. Your pick for us is the energy sector. I think this is interesting. I'm just looking at the Q3 earnings estimates. Energy overall is supposed to be earnings 14% lower year over year. Oil and gas 58% lower year over year. And you're actually more bullish on the oil and gas side. Tell us why.
Well, once again, it's a matter of perspective. When you think about our industry, it's ever changing. And just even a month ago, the energy probably was one of the top picks for every single firm out there as one of the top defensive plays. At the same time, what we see right now is we see
I never used energy as a defensive play.
For the increase of the production by OPEC. So this is going to present some weakness in the oil space, but also some buying
Not under this.
So energy, if you look at
We're at war, you dingbats, with energy.
Has a role in the portfolios.
Katerina Simonetti, thank you very much. One last look at futures in the red across the board. However, off of their lows of earlier today, the NASDAQ down about 0.25%. That does it for us. Squawk Box starts right now.
I hope so. I can't take it anymore.
Good morning. Futures just a little bit lower this hour.
Help.
But pretty good day yesterday. The major averages rebounded. The first positive session of the month. Still early though. Apple unveiling some new iPhones, but the glow of the big reveal gets a wet blanket from the EU in a 10-year case over back taxes. And we have liftoff. The Polaris Dawn mission is underway. It's Tuesday, September 10th, 2024, and Squawk Box begins right now.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan. Andrew is on assignment today. We'll be hearing more from him about what he's doing out in L.A. But let's take a look at where things stand right now in the U.S. equity
got bodyguards.
futures. Right now, you see some modest declines. Dow's down by about 13 points. The
Damn,
S&P's
you
down
look
by
hot
5.
today.
The NASDAQ off by just over 50 points. But yesterday, we saw some pretty positive gains in the morning futures, and that built throughout the session. Markets actually had their first positive day of the month. The S&P 500 had its best session since mid-August. It snapped a 4-day losing streak. You can see it was up by about 1.1%. And the Dow was up by nearly 500 points. That was its best session since August 23rd. Same story for the NASDAQ. It was also up better than 1%. That was largely because of a pop in NVIDIA shares, and we'll continue to keep an eye on that today. For the year, NASDAQ still up by about 22%. If you take a look at where the Treasury market stands, this morning you will see that at this hour, the 10 years at 3.7%, the 2 years below it, 3.68%. And crude prices, a lot of concern about what the drop in crude prices have been reflecting. There are some traders out there suggesting that this is kind of pricing in for at least a mild recession almost in the United States. Right now, crude oil down another 1.4% to 66.
I cannot believe we're talking about the same case, and it's the same.
I had to look into the details too. Are we really? Is it 2016, 2017?
Ireland. I remember it. I remember it well, and it's still breaking news, even though it's at least 10 years old. Just happened a couple of hours ago. Europe's top court ruled against Apple. And the tech giants, a 10-year court battle over its tax bill in Ireland.
Why you pay the taxes?
In 2014, the European Commission opened an investigation into Apple's tax payments in Ireland, the tech giant's headquarters in the European Union. In 2016, the Commission ordered the country to recover $14.4 billion in back taxes from the tech giant, saying Apple had received illegal tax benefits from Ireland over the course of 2 decades. Ireland's corporate tax rate was down
really low.
In the low teens.
It was trying to attract technology technology companies coming in.
Apple, meanwhile, says it's disappointed with the ruling. I don't know if it's the end or not, but after 10 years,
liberals are having a hard time paying taxes.
At this point, it's a real number.
I just wonder what happens with that, because
I don't know. I don't know how that.
If they have it in escrow in the meantime, does it go through? I mean, I just got a note from New Jersey that said I had underpaid in 2021.
A phone call?
No. It was not a phone call. This was an actual letter.
That I've definitely underpaid. And they tell me where I need to send it. And I keep trying to send them the money, and I can't find the address.
I can provide an account for you. No, I did, but and it was my fault. I talked to my accountant.
A small one, right?
Yeah, it was small, but the fines on top of it are huge. I guess that's probably not the case here because it was a dispute that was going back and forth. So maybe you're not racking up fines on that the entire time, because I can only imagine.
They don't even. You don't even want them to. Rebecca Quick might be someone different than Becky Quick anyway. You don't want any.
I paid it yesterday, immediately. It was brought to my attention, and I paid it immediately. I'm not going to argue with them over this.
No, you're not.
No.
You're not. And you're not going to say, me. And, when these 80,000 new agents that you and Andrew wanted so much, when they really start getting active.
I want them to get active because they're going to go after other people, too. I'm telling you, this is very minor. No, this was minor. I pay everything that's out there.
That's not for
whom
the
every single
bell
bill that
tolls.
ever comes through.
That's not for whom the bell tolls.
All right, the announcement from the EU comes less than a day after Apple launched its new lineup of iPhones, the 16 Pro and Pro Max and Apple Watches. CEO Tim Cook says that those phones are built for AI from the ground up, but Apple Intel features won't be available until a beta version rolls out next month. We're going to speak with an Apple analyst in just a few minutes about the new products and the EU decision, although I have to say the kind of cool commercial that they have, touting everything this thing can do, the video. I don't know if you watched through
I
it,
haven't,
and some of the things that he said. I want it. I haven't gotten a new phone in a while. This looks like it's got a lot of great things.
Like what?
Like the new camera itself, and when they get the AI features with it, you can do all kinds of quick things that kind of pull in and pull out. I want it for that alone. It's got better battery life.
Better battery life.
Yeah, I think those two things alone are enough, but the prospect of what AI might be able to do for you in terms of writing emails, trying to do some things and get it through. And by the way, I have an old phone, so I haven't updated in a while.
I don't even know what mine is. I have
Mine's
to.
an 11. Maybe
There's a way to find out.
I know, I gotta go look inside and find, but
Yeah.
uh,
Well, I don't. You think it's enough to? It's
I
so
think
much
it's-
better. It will cause people to get it.
well, I think it's the promise of what is so much better. The battery life and the camera alone are enough to suck me into it. The other thing, there are a lot of people who have not upgraded, so it's been a very long time since some people have seen upgrades, and maybe that kind of pulls them in as well.
Mine is not old. I recently got a new case because
very
the
fancy.
silicone case eventually wears out a little. My battery health is my main.
Yeah.
That's the main issue that I have, and I think it goes very quickly. Your battery health. My battery health is all the way down already to 85 maximum capacity.
Yeah, you need a new one.
I don't really need a new one,
It's a
but
pain, and if you get
it goes
stuck.
down pretty fast.
Yeah, and if you get stuck somewhere
When it's
without
brand new,
charge,
it's amazing. It's like, oh my god, it's only
it will last for 3 days.
right, but
Right.
you know.
There's that. Look, there were a couple other things I thought were interesting that they talked about. The Apple Watch is going to have a bigger screen, so you can do
Hideous
more on
already,
it.
yeah?
Yeah, but it's going to be able to detect sleep apnea.
Really?
Yeah, I think
I
that's one of
already
the
know
things.
I have sleep apnea. I need to do.
The AirPods are going to be able to eventually be turned into hearing aid devices, so I'm kind of on board with those
Oh
features
my
too.
god. All these
And
things.
it's the Apple Health push that they've been doing to be able to do more and
Right.
more things, and I think that's cool.
And that is all good.
Yeah.
You know, the one thing that is best for, and we've talked about it again and again. Lose weight, lose weight, lose weight. I got some great news yesterday.
Or get an Apple Watch.
If you are 6'1", and you're my age, which we won't go into, do you know what your maximum, the best weight you should weigh is?
163 pounds.
That's right in the center. I looked at 144, which would make people would worry about me. They would. 144 to 185. So I've down 20
Yeah, right.
like already.
Yeah.
And I'm supposed to get another, just to get to the high end, I need another 17 pounds.
Seriously?
Yeah. I don't think I'd
That's a
look.
lot. That sounds like you'd be emaciated.
I know, and that's to get to a decent. I mean, to get to a BMI of 20.
What about a BMI of like 22 is okay?
BMI of 22 would be okay, but everything, just go down the list of prediabetes and asthma and high blood pressure and sleep apnea and dementia. Everything in the world goes away.
Which is why people look at Ozempic as a miracle drug.
We have a buffet of stories, I'm told, from someone who should be paying very close attention to what I'm saying.
No.
You know who you are, Rob. Continue. Oracle shares trading higher this morning after the check down. You're a grandfather. You're a grandfather.
Congratulations,
You're
by
a
the way.
grandfather.
Congratulations.
You're a grandfather.
Contino family.
Congratulations. I can't
really-
believe it. You're 37. That's so weird. How does that?
Math works out.
Huh?
The math works
That's
out.
pagoda somehow.
No, and by the
no, he's
way,
not 37.
beautiful baby girl.
Beautiful baby girl.
So congratulations to the whole.
And you already had white hair, so it's not. You can't blame it on worrying about.
No, that's because of you.
That's me doing what I'm doing.
The other
right
big
now.
baby.
Yeah, this morning after the tech giant reported better than expected quarterly profits, artificial intelligence demand continues to help its cloud computing business boost earnings. And our wealthy wealth editor, Robert Frank, wealthy in life, points out that Oracle shares, the price jump allowed Larry Ellison to add over $13 billion to his net worth. That $13 billion is more than 2 times what he and his son are paying for Paramount. So that's pretty nice. They got that covered.
Yeah. All right, bank capital requirements to protect the nation's financial system from unexpected losses and shocks could be cut in half in the latest Basel proposal. The biggest U.S. banks would face a 9% increase in capital requirements. That's actually down from 19% from the original plan that was called for by the Federal Reserve, the FDIC, and the Office of the Comptroller of the Currency. According to people close to the matter, regulators agreed to sweeping changes to a proposed package of rules. Fed Vice Chair for Supervision Michael Barr plans to preview those changes in a speech today. We'll have much more later this hour coming up with our Leslie Picker, but this is something that the banks, in a pretty rare form, actually spoke up pretty very vociferously about these rules and said that it would hurt U.S. competition, it would hurt the banks here, it would hurt the ability for them to be able to lend and would hurt us in the long term. So this is kind of what you see. I wonder what they think about a 9% increase as well.
Yeah, not as bad. All right. Goldman Sachs CEO David Solomon giving investors a note of caution. Speaking at a conference yesterday, Solomon says that Goldman will post a $400 million pre-tax hit to third quarter results as it unloads its GM credit card business. Also a separate portfolio of loans. Solomon also warned that trading revenue will fall around 10% in the quarter in what he said was a challenging macro environment, particularly in the month of August. Analysts had estimated a 6.6% decline in the trading unit, so that's a little bit more than that. Stock, meanwhile, is up more than 25% year to date. And then this is you, Norfolk Southern.
Yeah, that story continues as well. This is a follow-up to that story we brought you yesterday. The Wall Street Journal reporting that Norfolk Southern CEO Alan Shaw could depart from the rail giant as early as this week. CNBC first reported that Norfolk's board was conducting an investigation into an alleged relationship that he had with an employee at the company and hired an outside law firm to conduct an independent investigation of those allegations.
And it's nothing like, says here, a rocket launch in the morning. That's an ode to David Faber, the great piece he wrote years ago. The Polaris Dawn, who was having us write stuff?
It was when CNBC.com.
Pamela Thomas Graham did.
I think it does. Was it really?
That's who it was.
This is when they wanted us to write stuff for
We have had some different people. Well, just by definition, we've had a lot of different people over 35 years that have been in charge. So we see the Polaris Dawn mission lifting off a short time ago from the Kennedy Space Center in Florida. The SpaceX crew, Dragon, on board a Falcon 9 rocket carrying private astronauts Jason Isaacman. These guys are all pretty cool, and gals. Scott Poteet, Sarah Gillis, and Anna Menon. They will use SpaceX-designed suits to attempt the first all-civilian spacewalk. They're also going to undertake a number of experiments and tests, including on the Starlink-based communication system, and they're going to perform scientific research on human health during that space flight. The mission is slated to carry the crew to an altitude of 870 miles above the Earth's surface. It would be the highest that humans have gotten since the final moon mission in 1972, and the first civilian spacewalk, the highest civilian spacewalk. I forgot to be nervous because it was last week. They tried a couple of times to do this, and we talked about how at this point there's been a lot of SpaceX launches and Polaris launches, so it should go well. But you always can't help being. But
the former astronaut Mike Massimino, who we spoke with a couple of weeks ago, he said that anytime you did a spacewalk, that was really heightened tensions because there are so many things that
and we
go
weren't.
wrong.
Our spacesuits weren't compatible with NASA space. And Mike Massimino definitely was like the XXL, big and tall man.
Yeah,
the spacesuit. That guy's
he's very tall.
He's a monster.
Yeah.
I know, but yeah. If it were him, he would be very excited. He
was. He said he was really looking forward to
Even if he was going, he'd still be excited.
Not so much for you and I think.
No. Not gonna do it.
But it was impressive. That's a cool thing to see. By the way, wanted to mention James Earl Jones passing away yesterday at the age of 93.
I noted that, and I noted the coverage. I mean, he was great, and I just couldn't help it, just watching the different networks cover it, because one network talked about how he was the voice of their network over and over and over and over and over again, which I immediately thought of because we all think of that.
This is CNN.
Exactly.
Right.
Another network. I didn't watch it all day long, but at least the first couple of times, no mention of that. I don't know why. Geez, it's just not a. It's like, oh yeah, it was you know, what was he? Darth Vader.
The thing he was most well known for was a role that wasn't even credited
The thing he
with.
was most well known for was that.
No, Darth
CNN?
Vader? I think Darth Vader more than anything. I mean, I of course, the second thing
You
that pops in my head is
for me,
CNN.
when
I was a
you're
Star Wars
when
fan,
you're
so.
ubiquitous with a global news network for how many years was it? It was just funny for another network, not even
Not to mention it.
Not even to mention.
but
Oh, by the way.
in my head, the first thing was Darth Vader, the second thing was CNN.
Yeah.
And,
Oh, by the way, he did.
and then
voiceover.
Field of Dreams.
I mean, is it really? You can't even. I mean, that
There's the Field of Dreams.
shows you that. Yeah, that shows you the state of the current news in this. You
But
can't
it-
even breathe the other.
He was a
networks.
classy guy. He was a funny guy. I don't know if you ever saw him on Letterman one time. Letterman did a top 10 where James Earl Jones showed up in character and just did the top 10. 10 things that, like ridiculous things that he could say that would still sound really impressive.
He was also in Clear and Present Danger.
What's up?
Clear and
Was number one.
Clear and Present Danger.
Yeah, he was amazing in that. Yeah.
Right.
Yeah.
Harrison Ford was devastated. He died in that, and Harrison Ford was the.
It he was very upset. Yes.
Exactly.
He also had the EGOT, you know, the Emmy, the Grammy, the Oscar. The
Oh, he
Tony.
did?
Yeah. One of the very few actors who did all of those.
Right. There's that actress.
The one who was on Sesame Street.
Yep.
Yeah.
Right.
Rita Moreno.
Literally. Hence the age issues I was just alluding to.
Right. When we come back, Apple unveils a new iPhone with an AI boost, a new line of watches and other products, but the EU throwing some cold water on the party this morning. We'll talk about what this all means for investors right after this. You can see that stock right now down by about 1.2%. Also, Vice President Harris and former President Trump get ready to debate tonight. We will talk to former Commerce Secretary Wilbur Ross about the race for the White House, economic policy, tariffs, trade, and much more. That's coming up at 6:35 Eastern Time. Squawk Box will be right back. introducing a new generation of iPhones with a focus on integrating AI into the device's operating system. In the meantime, this morning, the EU ruling against the tech giant in a 10-year court battle over taxes in Ireland. Joining us right now to sort it all out is Wamsi Mohan, Bank of America's security analyst. And Wamsi, let's just start with the news this morning, and that is this EU tax situation. It's been going on since 2014. We all kind of remember at some point what happened, but I forgot that it was still out there and that this could actually come back and bite them. You're talking about more than $14 billion in taxes. What do you think of the situation?
Yeah, thanks for having me. Good morning, Becky. Look, I mean, I think that it's obviously an unfortunate ruling from an Apple standpoint, and they've been in court for a long time. But let's put this in the context for investors, right? $14 billion of cash, essentially, that they've already escrowed and put away just in case that this really eventuality would occur. When you think about it in terms of Apple's free cash flow, right? We're talking about 14 billion of what they generate close to 100 billion annually, so less than 2 months of cash flow that is really being impacted. So when you think of Apple as an investment, this is more noise than anything else. It's unfortunate. Obviously, they fought it for a long time, and no one wants to give up $14 billion that could be put to other use. But at the same time, I think in the context of Apple as an investment in the long run, it is not a very big deal.
That's 14% of free cash flow. That seems like a really big deal. I would notice that if it was my bottom line.
Sure. I mean, for 1 year, yes, absolutely. But when you think about Apple's ability, and this is where Apple is so unique that you do this annually, every year, right? So it does take away $14 billion, absolutely. Not to say that that's minuscule, but in the scheme of what it means from an evaluation perspective, right? Like when you've got about 15 billion in shares, you're talking about $1 per share. So it's unfortunate. Obviously, this is not the outcome that Apple would have wanted, but at the same time, when you think about it in the context of where the upside could lie, how much of earnings could really come through in the next several years, I would say this is more of a blip and a nuisance rather than really something that truly changes an investor.
Okay, I can understand that perspective on 14 billion, a one-off, but it does seem like the EU is looking at this and realizing Apple and a few other big tech companies do this every year repeatedly and are looking for ways to come at a bigger bite of the apple, so to speak, and continue to kind of come after them, companies like Google and a few others. Is the EU and the way they look at our big tech companies a problem for Apple or any of the other companies that you cover?
Oh, absolutely. Look, I mean, the EU, it's actually fairly difficult to deal with the EU, right? We talk about China all the time. We talk about EU all the time. In China, you know, when you set the rule, it is the rule, and as you follow it, you're in compliance. There is no question around it. With the EU, there have been many instances where the EU has kind of said, "Oh, like let's go ahead and do this," and Apple goes ahead and implements something, and then you come back and say, "Well, we have other companies complaining about it." This is very much so the case in EU DMA in the services business, where it feels like a moving goalpost. Right. Yeah. So now you're taxing innovation. You're actually preventing EU consumers from getting access to the latest and greatest features. For instance, Apple Intelligence is not getting rolled out in the EU right away. And why is that? It's because when all the rules are a moving goalpost, then you don't really know if you're going to be in compliance or not. You're going to deploy a bunch of R&D dollars and find out at the end of the day that you really cannot be in compliance, and then go and re-engineer things and try to work out and find solutions. So it's definitely a problem. It's a problem that's kind of hard to overcome, right? Because you actually don't know what exactly the rules are, and when they're moving goalposts, it just makes it so hard to deal with the EU.
I was impressed by the new phone that they rolled out, the iPhone 16 yesterday. What about you?
Look, I think Becky, everything is more or less as people had expected on the iPhone 16, and I think that with Apple, when you look at the ecosystem, right? There were so many announcements that made the ecosystem so much tighter. It's about drawing in more and more users and growing that install base. Ultimately, all these services that we're talking about are going to get consumed on that large install base of devices. So you want to give people, a reason to want to upgrade. We think we have that. It's going to be even stronger next year. But this year, with visual intelligence, for instance, in the iPhone 16, you hit the camera button, you get a lot of interesting, cool updates based on the context of what you're looking at. And I think that's compelling, right? And this is something that's very tangible from a user perspective when you see your friends doing it. others are going to want it, right? So it's one of those features which I think is quite compelling and a smart way to sort of drive upgrades. But again, when you think about this in the context of 2 and 3 years with increased hardware, with increased and deeper integration with Siri, and over time, when you think about how we interface with the device, right, we're actually going to change the way we interface with the device, where it's going to be more of talking and speaking with the device rather than going into the phone and selecting an app, which gives Apple more control. And this is the key thing that I think Apple Intelligence does, is it puts Apple in a more of a pole position to decide where some of this traffic is going. For instance, so if you're at an airport and you want to book an Uber, you can say, book me a ride, right? And then Siri would determine who that ride could go to, and Apple could get compensated for that. So Apple Intelligence actually opens up another whole layer of monetization that people aren't really talking about. So it's, from an Apple perspective, I think it's very, very significant beyond the devices that they've just introduced yesterday. I think the whole notion of Apple Intelligence itself is very game-changing for the next several years.
Okay, Wamsi, thank you.
Thanks for having me.
It's a 14.
14, maybe mine's a 14 too.
The 14, I found how you do it.
I want a new one.
So we're going to be talking with Agent 99. Agent,
We've been there for a while with the Dick.
pardon me?
Dick Tracy and the phone, the watch phone.
We have specs.
I've
No
been sitting next to you
chortling, no chortling coming up. NVIDIA shares having a rough time following the company's earnings.
You know what I meant.
Agent 99. The company's earnings report. I loved her as a little boy. I had a thing for her. You remember her, Barbara Feldon? NVIDIA investors. That's a good way of remembering.
NVIDIA investors.
Waiting to hear from CEO Jensen Huang. Huang is expected to speak at the Goldman Sachs Communicopia conference tomorrow around 10:20 a.m. Eastern Time. Investors looking for more details about costs surrounding the company's next generation chip. The reason I'm smiling is because of what I'm coming up to here, thinking about Elizabeth Warren. On the most recent earnings call, NVIDIA hinted that gross margins could be coming down to the mid-70s if these costs do rise. Stock is down roughly 20% from its recent high, but is still up more than 130% over the past year. Remember, the grocery chain margins are 1.5% to 2%. Tech companies have margins, just in this case,
It's
coming down into the mid-70s. Better
alert.
Get on that, Liz.
Yeah. All right, when we come back, new bank rules could be headed to the financial sector, and regulators may be scaling down a major requirement. Also, how to turn horror into box office bucks. We're going to be sitting down with Jason Blum, the founder and CEO of Blumhouse Productions. He'll tell us about his formula for success. He's a lot of fun. I'm looking forward to this. We'll be right back.
Fabletics.com.
The Federal Reserve and other regulators apparently scaling back plans for increasing capital requirements for the biggest banks in the United States. Leslie Pickard joins us right now with more. Leslie, help us figure this out.
Hey, Becky. Yeah, so this has been a long time coming. In about 3.5 hours, we will hear from Vice Chair Michael Barr, who is expected to preview a revised capital proposal and explain the next steps. These remarks at the Brookings Institution come highly anticipated after the so-called Basel III endgame was first proposed last July. only to be met with tremendous pushback. The original plan would have required the largest banks to hold more capital against potential shocks, something critics argued would crimp lending and drive up costs for small businesses and farmers, as well as push business outside the regulated system and abroad. Bloomberg reporting last night that the sweeping changes for the 8 biggest banks would comprise a 9% hike in capital, down from 19% in the original proposal. And that report cited people familiar with the matter, the Fed declining to comment to CNBC, as well as the Financial Services Forum, which lobbies on behalf of the industry. Still, JP Morgan, Bank of America, Wells Fargo, Citigroup, among those that traded higher last night on the headlines. Industry watchers will also be focused on what Barr says about process. Will regulators opt for a complete reproposal or edits to the original documents? A reproposal would take longer beyond the presidential election, which, depending on who wins, could imperil the rules entirely. Guys.
What do you think the reaction from the banks will be? Because bankers really lobbied pretty hard against the initial capital requirements that were posted.
That's the big question, Becky, because I know that there has been dialogue between the two sides as these rules were getting thought out. Powell meeting with some of the larger bank CEOs, that's been an ongoing thing. Now, whether they would be satisfied with the halving of that hike in capital requirements is a question that remains to be seen. Mike Mayo of Wells Fargo had a note out this morning basically saying that, of course, does not necessarily mean that the banks will be satisfied. The question is whether they will continue to fight this. And then that also speaks to the question about process. Do they, if they do repropose, or even if they just do significant edits, do they put this proposal out for a significant comment period, maybe a 60-day comment period, which would allow the banks to then, express their concerns that way? A lot of questions. Hopefully we get some clarity later.
Okay, thanks, Leslie.
Coming up, the candidates getting ready to face off. The debate tonight between Vice President Harris, former President Trump, starts at 9 p.m. Eastern Time. It's in Philadelphia. We're going to talk to former President Trump's Commerce Secretary, Wilbur Ross. Before he was that, though, he had a 55-year career. We knew him so well on CNBC. Prior to him joining that administration, he knows a lot about a lot of things. The economy, trade, turnarounds, debt financing, on and on. Wilbur Ross is going to join us next.
That's right. Well, I try to explain.
Yeah, we're going to do, our next guest will give us an inside view of the 2024 presidential race, the state of the U.S. economy, and more. Let's welcome Wilbur Ross, who had a 55-year career on Wall Street before being tapped for a top job in D.C. as Commerce Secretary in the Trump administration. His new book is out today, Risks and Returns, Creating Success in Business and Life. And thanks for joining us, Wilbur. Just looking quickly, I mean, I've known you for so long, and you've been coming on Squawk Box for, well, you're on Wall Street for 55 years. I say you've been coming on, on Squawk Box for at least.
I think I was on your first show.
So 35 years.
Yeah.
Or no, 30 years, because it was 1995. So about 30 years, I think you were too. So we've watched you come in and get called in emergency situations and in corporate bankruptcies. And I think a lot of what helped or formulated your career was the idea that when Mike Milken invented high yield financing,
Right.
the whole world changed in a very positive way.
Yep. No, it did, and strangely, that's really what started my career. And then later in it, I represented the unsecured creditors in the Drexel bankruptcy, because Drexel went from being the most profitable Wall Street firm, $500 million after taxes, to bust in 2 years when the junk bond market collapsed.
And I've looked back and tried to figure that out. Was it the government's fault Drexel collapsed, or did Drexel bring it on itself?
Oh, I think it was a whole lot of things. You had a bad economic environment, you had rates go up, and Drexel also had been losing market share. In the earlier days, they had a 70+% market share. They were down to about 40% later on. Now, that's still pretty darn good, 40%, but it means you're down almost half from where you were.
I do remember. I've always thought the park, compared to what Ivan Boesky was involved with, the stuff Mike Milken did. He was parking stock. He was doing a couple of things, but it looked like the government wanted to get Drexel in it, as it turned out that they finally did. Talk about because we don't, not have you on here. We could do a episodic interview that lasts hours, Wilbur. But we've got competing economic visions. You would still, I guess, offer an ardent defense of the Trump economic plan that he had in 2016 and the results as well?
Oh, absolutely. And it was interesting. Toward the end of our administration, when business leaders would come in to see me, they were more grateful for regulatory relief than they were even for the tax relief. Because when you have regulatory relief, you can plan. You can make capital expenditures. Business can deal with success, can deal with failure. Uncertainty is very, very difficult for it to deal with.
I watched you last night on, for me anyway, the show of record during the day, Brett, there, and you were actually the network that did not mention James Earl Jones did the voiceover for that other network, but you gave an answer I thought for. Not maybe a unvarnished defense of tariffs, but in certain cases you can say that it is the last resort, and it cannot flow directly into a tax on U.S. consumers.
No, it's not, for several reasons. Number one, the government whose employers have been sending us the dumped material, government usually picks up part of the extra tariff we put in. The company itself.
The other government.
Yeah, the other government.
So they
eat part of it.
Okay, they eat part of it.
Yeah. Second, when, let's say it's a tariff on China and it's 20% on Chinese goods, that doesn't mean the prices will go up 20%. What will happen, supply will come from the next cheapest supplier.
In a different part of the world, theoretically.
In a different part of the world.
Netherlands.
And it may be up 2%, 5%. So all the stuff that there's this automaticity of, in effect, a tax on consumers is simply not the way it works.
Okay, but if that's the case, if the product is going to come from elsewhere and those tariffs are not going to be great on consumers, then how do you explain the sovereign wealth fund? That this sovereign wealth fund that's going to exist with all the money that's coming in from the tariffs, that's going to do everything from balance the budget to pay for child care for every American.
Sure.
It doesn't make sense.
Well, the Sovereign Wealth Fund came from monies that were earned before. That's where the capital and the sovereign wealth came from.
What money's
In
that
the
were
case of the Gulf countries, obviously mostly from oil.
Right, but from here in the United States, when we propose the idea, or when
Yeah.
Donald Trump proposes the idea of a sovereign wealth fund that now the Democrats are looking at too,
Well,
I just don't understand where you get the funding from that. We
I think
don't
what-
have
yeah,
the
what
same
everybody is looking
national oil
for-
riches.
Everybody's looking for a silver bullet that solves all the problems painlessly.
Correct, right.
That's the quest.
That's hard, and it seems like, I heard somebody say it this morning, this is like the Oprah election. It's how much can you give away? You get a car, and you get a
Right.
car, and you get a card
Right.
from every politician who's running.
Well, the only silver bullets went away with the Lone Ranger and Tonto. Remember those cowboy and Indian shows?
So
They
where
had
would the
silver
sovereign,
bullets.
then where would the sovereign wealth fund come from? So
Sorry?
where would it come from then?
Well, it would have to be appropriated initially, I would think, because there's no other source. No, you could dedicate a revenue source. Say, if you put a big tariff, you could say those tariffs will be applied directly to the sovereign wealth fund, not go for other purposes.
But it would come from U.S. consumers, would it not?
But you would need some sort of a source. It just can't come from nowhere.
Do you?
I suppose the Federal Reserve, since it has the power to create money, I guess it could create money.
Well, that's all we need. That's all we need. So just back to the tariff issue. Lighthizer, you worked with him.
Oh, sure.
Still have a
Bob's a good friend of mine. In fact, we put on a book party for him.
still have a huge influence into former President Trump's thinking, and how much of both sides, a lot of both sidism. Oh yeah, they're saying that either side, but they really don't mean it once, and it won't happen once either gets into office. How much of the tariffs across the board that has become an incredible talking point for Democrats to try to say Trump's out of his mind in terms of the economy? How much of it would actually be employed? Because Lighthizer probably is pretty like a lot of tariffs.
Well, you have to remember, Donald Trump occasionally speaks in metaphors. And when he talks about gigantic tariffs, which he did before the first administration as well, what he really means is, I'm going to be very tough on the foreign companies. I'm going to be very tough on their subsidized exports. You shouldn't take it all that literally, because he likes to use slogans, as do all politicians, that convey a message. And talking about gigantic tariff on everything sends a message.
As far as what we're going to hear tonight, what type of contrast do you see between economic policies? Do you think that Vice President Harris is going to stand by the idea of taxing unrealized gains?
Well, I think there are a lot of things that are wildly different between the two. The Democratic program seems to be pour money into the hands of people who don't have income otherwise, and they have the highest propensity to consume, to buy goods. And I believe that that infusion of billions and billions of dollars, maybe trillions, as a result of COVID, is really what led to the inflation, because that money goes into the pocket and goes right out again. Whereas if you take the same funds that were appropriated, but you build a factory or added to some sort of production, now you've got a supply coming in that could offset the demand that was created by the funds coming in. They only addressed one side of the equation.
Until they started doing the other, well, with the CHIPS Act, the Green New Deal, which is what President Biden admitted it should have been, the IRA should have been called in the first place.
Well, yeah, but remember, I was the originator of the push to get the CHIPS bill passed, and in fact, I ultimately sent a letter to every Republican in the Congress that even though the Democrats had loaded it up with a zillion things that had nothing to do with CHIPS. Remember, that bill came out as $500 billion. We had only asked for 50. 50 is what they actually gave for CHIPS. The other 450 had nothing whatsoever to do with chips. But I felt that on a national security basis, it's crazy for us to be that dependent on anybody outside, particularly on people who might want to do us harm.
You made it all 4 years. One of the other talking points that almost ubiquitous is how many former Trump administration officials have said they wouldn't work with him again. How do you see that? Did you have to just go, wow, I understand that you said earlier he speaks in metaphors, doesn't necessarily.
Right.
Maybe don't take him literally, just take him seriously. Would that be your answer?
No, roll back the clock. When Trump was elected, he didn't have a big cadre of people from before. He knew people from Wall Street, he knew people from real estate. He didn't have a big cadre of people experienced in government.
Mm-hmm.
A number of the early appointees were people that were not really Trumpers. They were, in fact, anti-Trump policies, particularly in the trade area. So there were mistakes made because he didn't have an infrastructure. Now he's gotten to know an awful lot of people in government, out of government, knows how government works. So I don't think you will see anything like a replay of the turnover if he gets another administration. It won't be anything like the first time.
If you were a single issue voter, free trade, who would be your candidate, or would it be neither?
For free trade?
Free trade.
Well,
All you want.
I believe there is no such thing. It's like a unicorn.
But if that, okay, who comes the closest to what someone who believes in free trade?
Probably Singapore.
Of the two candidates.
Oh, of the two candidates, I don't think either one is a free trader. And in fact, Gina Raimondo, my successor, has pretty well continued the same policies that we had. And in some areas, especially export controls, she's even gone a little bit further than we did. So I don't think the Democrats are at all opposed to being tough on the bad people who are selling things at too low.
Where's my book? Did you bring me a copy of the book? Where's my book?
No, I assume that.
Are you kidding me? Your people are doing it. That is, I mean, I'm sure anybody can learn a lot from reading that, because you said it. People think you can just walk into Wall Street and be a success. It takes a lot of savvy and know-how and experience and everything.
Well, it does, and there were some bumps and stuff along the road.
In the last 55 years, or 60 years, I'd say.
And the real message of the book, since I did face a lot of adversities from time to time, real message of the book is, if you hit adversity, don't go run in a safe room and hide. Face it and look for whether there's some opportunity hidden inside the challenge. And very often there is. But the aversion to work is really staggering among young people. I found a Reddit site a little while ago, 6 million participants, is totally dedicated to anti-work. And there are messages on it, like, I just can't make myself go to work anymore. Well, it's pathetic. I mean, these are young people, and the notion that work is an aberration, it's weird, it's not something that comes normally, total antithesis of the American dream.
Robert, thank you. Good to see you again. And
good to see you, Joe.
Revisit after 30 years.
All right, when we come back, more politics and your money. Harris campaign co-chair Senator Chris Coons will join us at 7:20 a.m. Eastern Time. Squawk Box will be right back.
Call him today.
Or you can pray. 7 a.m. on the East Coast, and you're watching Squawk Box on CNBC. I'm Joe Kerner along with Becky Quick. Andrew is on assignment. Becky's here. I like that color. What color is that? It's a light blue, isn't it?
It is.
It's a light blue.
Actually, you've got pastels going in this morning,
A little pastel-y.
Yeah.
A little pastel-y. Among
It looks like
today's
Easter.
Easter, which is coming again at some point. Comes faster than yeah. I know. Among today's top stories, Goldman Sachs CEO is warning that he expects the bank's third quarter trading revenue to fall 10% from a year ago. Speaking yesterday, David Solomon citing a challenging macroeconomic backdrop, especially during August. Solomon adding investment banking activity continues to be better due to encouraging signs in its backlog of business. Reuters reporting that Boeing has told its suppliers it's delaying a key production milestone for the 737 MAX plane by 6 months. Reuters says that the company's schedule calls for MAX output to hit 42 planes a month in March of 2025 compared to the previous target. And then in the Polaris, Dawn mission lifting off earlier this morning from the Kennedy Space Center in Florida. The SpaceX crew dragging on board a Falcon 9 rocket carrying 4 private astronauts. They're going to use SpaceX-designed suits for the first time to attempt the first all-civilian spacewalk that's scheduled for Thursday.
Blumhouse Pictures' latest release, Speak No Evil, is coming to theaters this week. The film is expected to follow the studio's tradition of turning low-budget horror movies into major box office successes. Joining us right now is Jason Blum. He is Blumhouse Productions' founder and CEO. We should mention, many of Blumhouse's movies are owned and distributed by Universal Studios, which, like CNBC, is a unit of Comcast. But Jason is a friend of the show, has been around for a while and coming in and talking to us about this stuff. And Jason, I have so many things I want to talk to you about what's happening in the content business right now. But why don't we start with the film that's out? Because this, like all of your films, scares me to death, even when I'm just looking at the trailers at this point. The run, the little passage of the word "run" when the kids are kind of passing that over, and James McAvoy, like seeing what's happening here. What's this film about? What really jumped out at you, and why'd you make it?
Yeah, this is our second film with James McAvoy, and it's a remake of a Danish film. And what I was drawn to about the movie, what the movie is really about, is that currently, and for the last few years, I think we, especially parents, have a tendency to overplease. We're too polite. We're scared to kind of say how we really feel. And this is about a family that gets in a situation where they're over-pleasing to the point of actually putting their child in danger. And I thought that theme resonated with me. There's this herd mentality in my kids' schools. So that's what first caught me about the movie.
Yeah, like the stupid yes days where you're not allowed to say no to anything your kids ask.
Exactly.
Never doing one of
And everyone's scared of the school. They're scared to, everyone's scared of everything. And that annoys me. So this movie's about that. This movie's about standing up for what you believe in.
Good, and standing up to your kids.
And standing up to your kids.
You told me to watch Split. That's what you're talking about, right?
Split was our other James McAvoy film, yeah. Did you like that one?
I loved it, yeah. M. Night was the
That was Knight's movie, yeah. We did 3 movies with that. We did The Visit, Split.
So what is it with you? I mean, you just like scary stuff, huh?
I love scary stuff.
I do too, but why? What's wrong with us?
When I was.
She's getting a list.
I'm getting the list out for
You're getting the list.
Let's see.
I liked all different kinds of movies when I was younger in the beginning of my career. But what I found with scary movies is I loved independent movies that could be distributed by a studio. And really, horror movies are the only genre that you can make low-budget independent movies and have a studio release them. So I was really attracted to that part of scary movies. And now we've been kind of building. What I'm building is a company that, what I want Blumhouse to be is like what Disney is to family. I want Blumhouse to be to scary. So we have a big year next year. We have 10 movies coming out next year, which is almost twice as much as we've ever had before. We have 5 shows. We have 3 video games, and we have a handful of live events. So I'm trying to scare people in all different media.
Oh my gosh, when's the theme park coming?
The theme park's coming soon. We have we're a part of Halloween Horror Nights now, which is.
Oh, I was joking.
No, it's true. We're a big Halloween Horror Nights happens in Los Angeles and Orlando, and there are multiple mazes and kind of experience based on movies, and we have 5 movies with mazes in Orlando and Los Angeles.
I mean, true terror you can go too far, I think. Maybe.
What's that?
True terror, I think you could almost go too far. I don't think you do typically.
What's true? What do you mean?
True terror, things that happen in this world.
Oh, yes.
I think you could go too far.
Yes,
I think of a movie like almost like Hostel, or you would not do that.
No, we don't do the most violent movie we did was The Purge and Halloween were like that, but it still wasn't
But
as
not
violent.
even just violence, but it can be. I mean, it can almost be too depraved. Can it?
Yes,
And I
it
don't
can
see
be.
you doing it.
We don't do that.
And some people do though.
We do more supernatural.
What, Chainsaw Massacre, the original, is that
Yeah.
too depraved, or did you like it?
I didn't love that movie. I don't think you
It's
do a
too-
Chainsaw Massacre.
But Rosemary's Baby,
Five Nights at Freddy's, Megan. I like horror movies that are fun. Those are 2
that are
movies
fun.
we did.
That was my point.
We
Yeah,
did
you
last
need-
year. I think it's if you put fun and jokes in a horror movie, the movie is actually scarier because you can't keep someone on their edge of their seat for 90 minutes. You have to get them to relax.
Yeah.
So we put jokes and we put fun stuff in, and then you scare them, and you're more scared because you're not expecting it.
Who's your demographic? Because I watched a lot more scary movies when I was a teenager than
Yeah,
I
our
do now.
demographic is younger, but surprisingly more young women than men.
Really?
We're 55% women, 45% men. So young women take their boyfriends to horror movies. Isn't that funny?
Yeah, then we can cuddle.
And you can cuddle,
Yeah,
exactly.
and hold hands. Let me ask you about the horror movie that's playing out in the content business right now. I hear from so many people that it has gotten so much harder. They can't get projects greenlighted. There's a cutback in spending across the board, and that's because streaming, that was the Wall Street darling that provided all this money, has gone away, and investors are looking for profits now. Do you see that in your genre? Do you see it outside? How is it playing out? And is it way worse than it was before the streaming bubble took off?
I think overall, we've always operated our business with a normal P&L all the way through stream. We're not really, we supply streaming a little bit, but our primary business is a theatrical business.
Mm-hmm.
So for us, I think it's normalized the business. And horror is one small bright spot in theatrical. Last year, horror did almost $1 billion. And this year, box office is down this year as compared to last year, but that's really specifically because of the strike and COVID, and we had those 2 things that knocked theatrical to the ground. But you even see by the end of this, by August, we were down kind of 15 to 18% in June, and now we're down like 12%. So we may finish the year pretty close to last year, and I think next year it'll come up. But so that's where theatrical is. I mean, it's definitely down, but it's coming up and it's recovering from those 2 things. I think the rewarding of content companies for subscribers and not profit got the whole business out of whack, and there's this kind of correction going on. I think ultimately the correction will achieve is a few less TV shows and maybe a few less movies, but they will be better. I think people are now adopting my philosophy in our business, which we've always had, is you don't make money unless the thing you made money. Doesn't seem terribly complicated. But that has not happened for a long time, and that's coming into vogue again now.
You have gone at this. You said you focus on the P&L. And you've got a few rules that you really follow very closely to make sure you don't go over budget. What are they?
Well, the biggest rule, not too many special effects, not too many locations, not too many speaking parts, but the biggest rule and the most expensive thing about movies is how much you pay the above the line. The writer, the director, the actor, the producer, and that includes us. We never take fees on our movies. We only make money if the movies make money, and everyone else follows suit. The director, the writer, the other producers, the actors are all paid the minimum we're allowed to pay, and then if it works, everyone does well. And if it doesn't work, you go on and you're not hurt too badly. And I've been screaming from the rooftops that if your actors and the creative group that's making the movie is actually invested in the movies will be better and the shows will be better, and I think that's going to happen.
Jason, thank you for coming by again, and I think Joe and I are both looking forward to seeing this next movie
Love
too.
them, love them all.
Speak no evil. Well, thank you for having me.
And it
Thank
just
you.
sounds scary. Speak no evil.
And Speak No Evil on Friday. That's the opening.
Speak no evil. Yeah, opens this Friday. Yeah, exactly.
Thank you.
Exactly. Thank
Great
you
to
guys.
see you.
Thanks for having me.
All right, when we come back, we have more on this morning's Top Stocks to watch. See you in a minute.
Welcome back to Squawk Box. I'm Dominic Chu with a check on your morning movers. We'll start things off with shares of Apple and Alphabet. Now, Apple is moving lower here by just about 1%. Alphabet relatively flat so far. On rulings out of the European Union's top court. Now, in the Apple case, the court sided with an EU order from 2016 for Ireland to collect roughly 13 billion euros in unpaid taxes. In the Google case, the court agreed with a 2017 decision to fine the company 2.4 billion euros for giving preferential treatment to its own price comparison shopping service over rival offerings. So those bits of news moving these two mega cap stocks. Shares of Oracle, meanwhile, are up around just about 8.5%. After reporting a beat on both earnings and revenues for the quarter, the company also announced a partnership to bring database services to cloud infrastructure market leader Amazon. JMP Securities is also upgrading Oracle to a market outperform with a $175 price target. UBS goes to 175 from 160. Goldman boosting its target to 155 from 137. That's just a sampling of some of the price target hikes there on Wall Street. So Oracle in focus. And we'll finish by checking on shares of Tesla after analysts at Deutsche Bank resumed coverage of the auto sector and named Tesla its top pick with a buy rating and a $295 price target. Now, for more on that and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers there can get more access to the analysis of the day's big calls and stories. So keep an eye on those shares. Keep it right here. Squawk Box will be back right after this commercial break.
Let's talk markets. Joining us now, Anastasia Amoroso, Chief Investment Strategist at iCapital. Good to see you.
Good
Good morning
to see you, Joe.
in
Good
studio.
morning.
Inflation ever worry you anymore, or we've definitely shifted to growth concerns?
It seems like it's not the one that matters anymore. I mean, we are expecting an inline print of 3.2% core CPI, and I think that's good enough. I mean, importantly, we do see the 3 months annual as inflation that's coming down quite significantly, more so than the 6 months number. So I think that should provide support for the case for the Fed to cut interest rates. But you're right, Joe, it's not about inflation anymore. It's more about the growth concerns. And, you know, so far what's unnerved the markets in this first week of September is that we're once again on the recession watch and the recession obsession, as I call it, only because the labor market seems to be weakening more than expected. So that's the driver in the markets right now. Personally, I don't subscribe to the view that we are headed for a recession. I think this economy is slowing, but it is still growing. And outside of the unemployment rate, you look at the range of economic indicators, and they're not implying high odds of a recession.
If the Fed were able to start its cutting cycle with a 25 basis point cut, that would be very positive, that it didn't have to do what it thought was anything more substantial than that, because things are going pretty well and under control. Will the markets test the Fed and push the Fed. I mean, good day yesterday, but last week I started wondering whether the markets were going to push the Fed to a 50 basis point.
Well, they may try. They try. And, you know, there's a 50-50 chance that the markets are pricing in that we get a 50 basis point cut right now. So they certainly do try that. But the Fed is not really easily pushed around. And, you know, Joe, what we have right now is not a state of an emergency. You know, we have somewhat weakening labor market. We have inflation that's under control. GDP is still growing 2%. So things are actually in check. So I'm hard-pressed to think that the Fed is going to say, let's do 50 basis points.
It's too good to be true, though, Anastasia, isn't it?
Well, I mean, well, maybe it's slowing, so maybe it's not as good as it was once was.
But it's a very great place for the Fed to be.
Yeah, I think it's a very great place for the Fed to be. And, you know, 50 basis points on the one hand could signal that they see something that the rest of the market participants don't. So in a way, I don't actually want to see the 50. But you could also make the case that, well, they do have a lot of room to cut. They probably have 250 basis points to work with to get back to neutral. So if they want to kickstart this cutting cycle with 50, that's fine. But here's what I would say broadly for the markets. You know, it's not 25 or 50 basis points that matters. What matters is that we are in the beginning of a rate cutting cycle that's likely to go on for some time, and it is already providing relief to various parts of the economy, not just the markets, but the economy. And if you look at the 6-month SOFR rate, for example, it was 5.4% a year ago. It's about 4.5% today. You know, if you think about your floating rate loans that are based off of that, they're already adjusted lower. And so eventually this is going to boost demand for credit. And actually, I shouldn't say eventually, because it is already boosting demand for certain loans, for commercial and industrial loans, for example. So I think the knock-on effects from a rate cutting cycle, whether it starts with 25 or 50 basis points, that knock-on effect is going to be strong in the coming months.
Usually we worry about September and then an October low. Not this year.
Well, so far September is living up to the bad seasonality.
Well, yesterday, we got back.
Yesterday was good. We were happy about that.
Back into that or not?
Look, I don't think seasonality on its own is a good predictor of market returns. Sometimes it works, sometimes it doesn't. And if you look at the last 4 or 5 years, including, I guess, this year, you did have bad September seasonality. But if you extend that out to 20 years, actually 50% of the time the returns were positive in September. And the average return was about negative 70 basis points. So I wouldn't call that exceptionally bad seasonality. So I like to focus on the fundamental drivers, which, you know, one of them is the economy that's not really in a recession and is still growing. And the other one is artificial intelligence stories alive and well. And it seems like post-NVIDIA, the markets concluded that NVIDIA didn't deliver, or maybe the AI sector is not delivering, but I don't really think that's the case when you have billions of dollars going into artificial intelligence spending, and the spending intentions on Gen AI are absolutely being prioritized.
So the election's coming. Didn't even mention, I didn't think you used the E word. Did you? You don't think one way or another, and the Fed's not thinking about it, and the stock market's not going to affect it, and the election itself isn't going to affect the stock market, so we can just take it off the table?
Oh, well, no. And underneath the surface, you are seeing some market reaction. You know, first of all, when you look at the Republican outperformance baskets versus the Democratic outperformance baskets, they have been shifting around, you know, depending on, you know, what the polls and the betting odds have been suggesting. But what I do hope to hear tonight are some policy proposals. And, you know, look, those policy proposals will really be used for voter awareness, but they're not necessarily going to dictate the direction of the market, because, as you well know, Joe, just because you have a policy proposal doesn't mean it ultimately gets enacted, because so much has to do with the composition of Congress as well.
Let's hope not, anyway. All right. Anastasia, thank you.
Thanks, Joe.
Okay.
All right, when we come back, a preview of tonight's debate with Harris campaign co-chair Senator Chris Coons. Squawk Box, we'll be right back.
Vice President Kamala Harris and former President Donald Trump will take the stage tonight for their first presidential debate. This will be the first in-depth look voters will get at some of the candidates' policies and agendas. Joining us now, Harris campaign co-chair, Senator Chris Coons. And Senator, I was thinking about it. The term "joyful warrior," this is come into vogue now. I think they got it from you. If I looked that up, and I think I see I've mentioned that in the past, that if I ever had something happen and I needed someone backing me, you might get a call. But welcome this morning.
Thanks, Joe. It's great to be on with you, and I'm looking forward to tonight's debate in Philadelphia. I appreciate your optimistic framing that the American people will get to hear about the policy proposals of both candidates. That's certainly what I hope happens, and that we aren't treated to an invective-filled diatribe from the former president. The rules they've agreed to about the mics being off and some strong facilitation should lead to a chance for us to hear a clear comparison between the two and their policies, how they would strengthen us at home and abroad, how they would explain and defend their records, and where they'd like to take the American people. That's certainly what I hope we're going to hear tonight.
But just the idea that your campaign, Vice President Harris's campaign wanted the mics turned on. They were fighting against that. If you're hoping that this will be more substantial and the rules allow for that, why was the campaign fighting against it?
Look, I wasn't one of the ones fighting for the mics on or mics off, but I'll just tell you, Becky, my best guess is because they correctly predict that the former president has struggled to maintain his calm and cool when he's confronted with questions and challenges about his policy proposals.
But
in the previous debate with President Biden, former President Trump just kept talking even though the mics were off.
Senator, we always see on a TV show about about a trial, when one side brings up an issue that wasn't going to be brought up, the other side immediately is allowed to say, hey, wait. So you said you hope that we finally hear about some policy proposals. I mean, I couldn't help in my ears, that just made me think you're going to need to address how difficult it's been to talk to Vice President Kamala about for anyone in a non-scripted way, whether it's the media facing questions. I know what kind of spices she likes, and I know she doesn't like those Starbucks lids that are the wrong color. I know a lot about her.
Joe,
we don't know a lot. So it's been a long time. It's been a lot of rope-a-dope, Senator, and a lot of people are looking forward to finally hearing something of substance so American voters know what they're voting for.
Well, Joe, I think last week in a proposal in New Hampshire about how to strengthen the opportunity economy and help promote startups, she made clear something that she's been focused on a long time but hasn't gotten a lot of coverage, which is her passion for small business, for entrepreneurship, for engaging the passion for job creation of millions of average Americans who, with the current tax deduction of $5,000 for a startup, struggle to get together the capital and the running room to get out of the gate to launch a new business. She set an ambitious goal for new business starts. She proposed a significant increase in the tax cut for new startups, and she pledged to be engaged in reducing bureaucracy and red tape. I serve on the Small Business and Entrepreneurship Committee in the Senate. Senator Shaheen of New Hampshire, my senior colleague on that committee, said she was very impressed with the Vice President's concrete and specific proposals. In sharp contrast to that, the former president has alternatively said he wants a 10% or a 20% tax on all imported foreign goods, a tariff on everything the American people buy that was made overseas. A great idea from the 19th century that doesn't make a lot of sense in the 21st century,
Senator,
and that bluntly would be an across-the-board tax. He keeps insisting it wouldn't raise costs for the American people, and of course it would. And we would face immediate reprisal from our international trading partners. Joe, I just spent a week with a bipartisan group in Japan and Korea talking about how we deepen and strengthen our economic ties with these two countries that are great sources of foreign direct investment in the United States and where we're one of their largest trading partners. None of them thought a new across-the-board tariff on products from Japan and Korea was a good idea.
Senator, one of your colleagues said something the other day that got a lot of attention, and Senator Bernie Sanders just saying it. Just to summarize that, whether Vice President Harris had abandoned some of her progressive policies, and he said, well, for now she has, because she's more pragmatic to win the election, but she still is a progressive. I want to show you what happened on another network yesterday, kind of surprising maybe for the network where it appeared, but these were some of the 2019 campaign positions when Vice President Harris was running for president. And it actually shocked the person that these actually were on an ACLU questionnaire. So free gender care, taxpayer funded transition care for detained migrants, end any migrant detention, defund ICE by at least 50%, and end the use of any ICE detainers. This was just a couple of her positions back then. Are these positions now that the vice president would pursue? A, and B, if she says she wouldn't pursue them, why shouldn't we believe Bernie Sanders that it's just to get elected and that she would revert to those same policy positions once you were to be elected president?
So, Joe, I think what we ought to be measuring the candidates tonight on is their actual performance in office. So we've seen some of the greatest and strongest job growth ever under any president under the Biden-Harris administration, a renaissance of American manufacturing. Donald Trump talked a lot about restoring manufacturing, investing in infrastructure, and failed to deliver. And as the vice president to President Biden, Kamala Harris has a strong record on economic job growth. More importantly, the thing that Bernie Sanders was criticizing her for was backing off Joe Biden's budget proposal to raise the cap gains rate to 39.8. She came in with a 28% increase to the cap gains rate. Bernie wants it to be over 50%. So he was saying she's still a progressive. I think on social issues, she is indeed dedicated to freedom, to reproductive rights, to making sure that we keep the government out of people's bedrooms. But her very first substantive speech as a presidential candidate on economic policy showed moderation and a decision to continue to provide for predictable increase in revenue and a stream of investment in startups and in small businesses. So rather than looking back 5 years, I'd look at what she has said in the last few weeks, and I would sharply contrast that with the former president, whose own vice president, chief of staff, secretary of defense, and national security advisor have all said he does not belong anywhere near the White House. A sharp contrast. What he said and did in office and what she has said and done in office. And now that she's our candidate for president, we're going to see more and more proposals on how to reduce housing costs, how to reduce prescription drug costs, how to incentivize more startups, and how to encourage more investment in the American economy. That she chose to focus on an opportunity economy as her main theme in her speech in New Hampshire recently, I found very encouraging.
Senator, yesterday we had another surrogate, campaign surrogate for the campaign, for Vice President's campaign, Commerce Secretary Gina Raimondo, not speaking as Commerce Secretary. But when I asked her whether there was any explanation for how difficult it's been, I don't know how many extemporaneous press briefings former President Trump has had in the last 40 or 45 days, but it's dozens. And we're exactly at zero still for Vice President Harris. And I asked her, and she said, well, she's been really busy. But we've seen some crazy stuff in retail outlets and, some funny moments and things. We've seen plenty of stuff, but not that. As vice chair, or co-chair, I'm sorry, of the Harris campaign, were you involved in that decision to basically keep her away from speaking extemporaneously? Senator, what was the thinking
Joe,
there?
as you can well imagine, I'm not her daily scheduler, but I served with her in the Senate. I've worked with her as vice president. I know her to be smart and capable and focused.
Why do it then? Do you have an explanation for why she's been kept under wraps like that? Because it just raises people's suspicions and people really wonder what's the problem.
Look, what I find concerning is that when Donald Trump gives those completely unscripted long, rambling interviews. The things he talks about are unhinged. In economic policy, he talks about slapping a tax on all Americans on all imported goods and taking control of the Federal Reserve, but then rambles off and talks about Hannibal Lecter and whether he'd rather die by being eaten by a shark or electrocution. I find those alarming. I don't think that we need candidates who do that, who ramble on stage in unfocused and unconstructive ways. That concerns business leaders. What I do take some real reassurance in about her policies and her directions is the recent endorsement of Vice President Harris by the current or former CEOs of dozens of major American companies, whether it's Merck or DuPont, Xerox or Pepsi, Sony or Bank of America. We've got major corporate leaders, and frankly, Goldman Sachs, which just came out with an assessment of the economic plans of both candidates and said that Donald Trump's economic plans, on balance, would reduce growth by 0.5 point, would increase inflation, and would be a drag on the economy, and add $7 trillion to the deficit, or to the debt, forgive me.
None of the current CEOs,
our current growth.
the current CEOs were I think, Snap and Yelp. The Merck CEO is a former CEO. The Pepsi CEO is a former CEO. The Xerox CEO, former CEO. Every one of them that you mentioned. And the Goldman Sachs piece, this assumed that her tax plan goes through completely to raise $5 trillion. It also assumes all the tariffs go into effect. And the Goldman also assumes that we leave the southern border open and don't try to deport any of the 13 million aliens. That's the reason for the increase in GDP. If you think the trade-off between having 13 million unregistered immigrants, illegal immigrants basically, and an open southern border is worth 0.5 point of GDP, that's a trade-off that most Americans probably wouldn't be willing to make. So, Goldman Sachs can come out with that, with that analysis, but I don't think most Americans would say, yeah, I'll take 0.5 point of GDP if you leave the southern border open and don't deport any of the people already here. Do you?
Well, Joe, there's a significant difference between enforcing our immigration laws and deporting folks who are dangerous criminals and who urgently need to be deported, and former President Trump's proposal to use the military to conduct broad sweeps in the center of the United States and to set up checkpoints and at gunpoint force people into camps and deport them at a very large scale, millions and millions of people. We're looking at two starkly different views. As you know, I support strong border security, and Vice President Harris has said she would sign into law the bipartisan proposal that was hammered out by a conservative Republican senator, James Langford of Oklahoma, and a centrist, Senator Sinema of Arizona, and a Democrat, Chris Murphy of Connecticut. The three of them worked out over months a credible conservative proposal, which at the time was endorsed by the Border Patrol Union, for how we should secure the border. It would invest a lot of money in border security, it would strengthen the asylum standards, and it would increase deportations. Kamala Harris has said she would sign that. Former President Trump killed that. I was in the Senate when this happened, Joe. He directed the folks who were supporting it to kill it so that he would have an issue, not a solution, to the critical concerns that all of us have about border security and immigration. So we can debate whether or not current or former CEOs have endorsed her. What I think matters is that CEOs I know who ran major multinational companies like DuPont or Xerox or Pepsi look at the two of them and say predictability, respect for the rule of law, and their economic approach trends towards Kamala Harris. So I agree with you. We all want to hear more substance out of both of these candidates, and I think that's what we could and should hear tonight, and I'll be cheering and looking forward to commenting afterwards with you.
Great, and I don't know what we're going to talk about in December, like maybe the Eagles or something, I don't know.
Hopefully the Eagles being on a winning streak, yes.
I may not want to talk about the Bengals. At this point, with what I saw, maybe we will talk about the Eagles. All right, Senator.
Thanks,
Good to have you. All right, thank you. See you.
When we come back, a big week for inflation data. We're going to find out what it could mean for interest rates and the Fed when they meet next week. Squawk Box will be right back. right, welcome back, everybody. CPI is due out tomorrow morning at 8:30. Ahead of that, we want to welcome former Dallas Fed President Richard Fisher. He's now senior advisor to Jefferies. He serves on the boards of Tenet Healthcare and Warner Brothers Discoveries. And, of course, he is a CNBC contributor. And, Richard...
And have been for 20 years.
Yeah, we were just talking about this. It's been 20 years since your first Squawk Box appearance.
October 13th of 2004. And I was the host.
Guest host. Guest host. Guest host. Don't pad your resume.
Oh, I'm so desperate to do that.
Does it come to that? You're on the Fed, for God's sake. But your claim to fame, you were hosting Squawk Box.
Well, you know, that was a year before I went to the Fed.
Fed is better.
All right. I agree with you on that.
So if you were in the room next week making this decision, what would you do? Would you cut 25 basis points, 50 basis points, and why?
No, I would argue for 25. First of all, you don't want to send a signal of worry. The Fed doesn't worry about politics, but you know darn well if they did 50, one of the candidates, you know who I'm talking about, would be all over screaming about the Fed. And I don't think we are slowing down, there's no question about it. We still have positive economic growth. Inflation's coming under control, but we're not fully there yet. But it was pretty clear after Jackson Hole, the change in direction is taking place. So 25 basis points would be my argument.
And even with politics, I was trying to think about it. It's hard to imagine either candidate complaining about a rate cut right now. It's so
Since
close
they've
to the
both been
election.
hammering the table to get one.
saying that they want one.
Yeah.
Coming
But
through
anyway,
on this.
politics
is weird.
Trust me, they're indifferent to politics at the FOMC. I never heard it discussed in 10 years. So, I mean, the real issue right now, and I've talked about this a lot, and I'm always surprised at where things are trading, is how do we finance our deficits? The Treasury auctions have actually gone fairly well. We've been very lucky that we have so-called households, which are really foreign flows, pension funds, insurance companies, have been buying the 10-year and buying other debt. But our interest costs now are $2 billion a day.
Yeah.
And the other thing is they shifted to Treasury bills. This is at the Treasury. This is Secretary Yellen. And 22% of the refinancings are in Treasury bills. That's 5% money. So if the Fed does cut, that'll assuage that pressure a little bit. But it used to be 2% money.
Do you think that if the Fed cuts, that's going to be okay with all the buyers who have been showing up? They'll say, okay, we'll take less for what we've been floating you, or you think there's a point where those
that are
buyers
holding 5%
disappear?
paper could be very happy.
Yeah.
You're looking at one of them.
Yeah.
And I don't know anybody that I know, an investor that hasn't put money in the short term, 1 year or less, or 2 year or less. And those rates have come down. So the returns are pretty nice for totally risk-free paper.
Totally risk-free. The returns in the market have been pretty good, though, if you're looking at equities.
Yeah, that's been helpful. And so that's another reason I would argue for 25 basis points. We still have accommodative markets. We've had some shocks to the system, but if you look at all the ratios, the spreads and so on, we're still pretty accommodative.
So you think the economy's in a decent point, too? Because we have a range of people who come on this show, some of who think, yeah,
Well,
this
your
is the
previous
continue.
guest was talking about, recession obsession. We've had we've had this for years. And what I get a kick out of is we had the 2 to 10 was inverted. And everybody said that's the signal for
Now it's
positive.
I know.
So what does that tell
That's when it's supposed to happen, though. That's when
that, and that's historically what has happened. But still, I got a kick out of that negative argument, saying we've been talking about recessions for 2 years.
Well, eventually we'll be right.
Yeah, eventually we'll be right.
When you look at politics, it may not be coming into the Fed's discussions on some of these things, but as somebody who's watching what could happen, what do you think of the economic plans that we've put forth? What would you like to hear more about in tonight's debate? If there were things you would like to pin down each of these candidates.
Well, I want to hear more specifics from Kamala Harris. We haven't heard any specifics at all. And just to say my orientation, whatever she said, has not changed. Well, what does that mean?
Kamala.
I would love to hear
Kamala.
Donald Trump walk away from
Richard, Kamala.
Kamala.
Like Kamala.
Miss Harris.
Don't do a whatever. And if you say it the way you said, I'm just warning you.
All right, Vice President.
Trying to help. Trying to help.
As far as President Trump is concerned, given that I am a free trader and I was in the Clinton administration and we believed in the George H.W. Bush agenda on trade, I'm very worried about this discussion about tariffs. They can be, I'm all for applying them to China in certain ways.
Punitively.
Yeah, because they cheat. I did the protocols for their accession to the WTO. I negotiated that. And they've cheated on every sentence in that document, every sentence. But doing it across the board is going to be inflationary. It takes it out of companies' hides. So I would like to see that. They're not going to go into that kind of detail in this debate. But at some point, I'd like to hear how the staff and how the president, if he gets elected, is going to implement it.
So that sticks in your craw more than I don't even want to list it for you. I think it's kind of funny though. Price control. Where do you want me to start? Price controls, taxing unrealized gains, 45% capital gains.
I am 70. I'm about to be 70.
Any of those bother you, or you just?
Yeah, price controls lead to.
Okay. How about taxing unrealized gains?
You know, I don't know how that possibly could be.
Okay. How about a 45% capital gains rate?
I'm against that as well.
How about raising corporate taxes?
But I want to hear
how about raising corporate taxes?
Stuff, and I haven't heard her say it just like that. It comes out. But I think it'd be helpful for all of us. Uncertainty is the enemy of decision making. Yeah. And right now we have enormous uncertainty about what she stands for, Vice President Harris. And we also have fairly good certainty about what Trump stands for. I just don't like some of it, particularly the tariff side.
Okay.
And I do worry about this current session of Congress, whether they're going to be able to roll over those extensions or not, because I think they've been very positive. Okay. And the other thing I will say about the Trump administration is they were very good on regulation, taking something off the Federal Register for everything that might be out, actually taking 2 or 3 things off.
Yeah.
We're over-regulated. Remember, I'm a Texan, so I mean, we believe in free enterprise where I come from.
You wouldn't, I would just like to watch Elon Musk take apart the regulatory.
That's been a good proposal.
I just want to get some popcorn and watch. I mean, it'd be worth that. You could be a single issue voter just on that.
And under both administrations, Joe, enormous fraud.
Yeah.
Money that was distributed. That needs to stop.
Pointed right at me.
And it's in the tens of billions or hundreds of billions. Yeah. It's amazing. So there's monetary policy, which I prefer to talk about, and then there's all this other stuff. But you liberate the private sector.
Right.
We learned that in the Clinton administration.
I know.
Richard Fisher, 20 years here on Squawk Box. Thank you.
And you haven't aged 1 minute. Joe, on the other hand,
has not. You want to go there? You want to go there? Who's just, thanks, Richard. Who's just out from Southwest Airlines Executive Chairman Gary Kelly will retire from the board effective immediately following the 2025 annual meeting, following pressure from activist investor Elliott Management. Southwest will also decrease the size of the board to 9 members. Squawk Box is coming right back.
right, welcome back, everybody. Diversity, equity, and inclusion programs at many companies have come under political fire and activist threat, prompting some leaders to back away from public participation in DEI initiatives. That's a challenge for CEOs trying to build strong workforces. And joining us right now is Ann Chow. She's former AT&T business CEO and author of Lead Bigger, The Transformative Power of Inclusion. Ann was the first woman of color to hold the position of CEO within AT&T in its 140-year history. And Ann, welcome.
Thank you so much, Becky. It's great to be here.
Let's talk about this because DEI has become so politicized. I think what started out as a way for a lot of companies to try and make sure that they were reflecting their customer base all around them has gotten a bad rap, and in some cases for very good reason. What's your thought process on how things have changed and what DEI really should be?
Yeah, well, my view about DEI and what companies are facing today is it's really about harkening back to your purpose and your values. And so if you're a leader today and you're thinking about those commitments that you've made to your full range of stakeholders, whether they're your customers, your shareholders, or your employees, you've got to stay true to that purpose. And so from my perspective, DEI, it's an acronym that quite frankly oversimplifies three very important topics: diversity, equity, and inclusion. In my book is about the power of inclusion, which is really a way of leading that aligns everyone, right, by widening your perspectives and including everyone for greater performance and impact. And that's all inclusion simply is.
Mm-hmm. And that makes a lot of sense. You want to make sure you're reflecting the world around you, your customer base, your suppliers. But in some cases, it's been played out to this kind of crazy point that instead of only hiring white men, we'll only hire people who aren't white men. And how do you find that balance? How do you talk to leaders and say, hey, here's what inclusivity really is?
Yeah, absolutely. So DEI is not, I think what the misnomer is that it is representation at the cost of everything else, which is never what it was intended to be, right? The world is more diverse, as we all know, and becomes more and more diverse. And so we as leaders are compelled to lead in the way that not only reflects today's workforce, today's market, today's investors, but tomorrow's as well, right? And so for leaders, you've got to be very, very clear about the metrics and about the benefits to the business, right? And there's plenty of data out there that shows that leading inclusively and inclusive workplaces are better. They yield better results.
The metrics, what would be the right metrics? I mean, if you're looking at it, what were the problems that existed before? What are the right ways to fix it?
Well, some of the challenges that existed before would be, a lack of truly innovative ideas that might be breakthrough, right? When we're challenged with growth opportunities, we're often told to think bigger. You've got to think bigger. Well, you in and of yourself, in your existing team, in your existing structure, can't think bigger without new perspectives. And that's what leading bigger is widening your perspective by including others.
So how do you do that? I mean, I can think of places that I've worked that would only hire Ivy League graduates, other places that really only hire from 1 or 2 state schools.
Yeah.
We all get comfortable with those pipelines that kind of feed in from who we are, what we know. And when you're faced with 1,000 applicants coming in for a job, it's pretty hard to pick out and say, this person's going to be better than that person, other than, hey, I know this person who knows this person, and they've given me a good review of that person, so I'm going to take a flyer on that. How do you get past that?
Yeah, I think we all have to realize that leaders, over 70% of leaders choose proteges that are of the same race and gender, right? Yeah. And it gets to your point of we like comfortable, we gravitate to comfortable, but what we have to realize in today's world and tomorrow's future, comfort means stagnation. It means a lack of change, a lack of forward movement. To the earlier conversation about metrics, and these are some of the things that I cite in my book, an example Harvard Business Review study, and these are some of the sample metrics around the power of inclusion and inclusive workplaces. You've got over 70% more likelihood to generate revenue from innovation revenue, which is new products and services revenue. You have 70% more likelihood to capture new markets. You have a higher level of team performance. You have a higher level of collaboration. And importantly, given how critical talent is today, you have a much lower risk of attrition.
What about the pushback that's coming politically right now? Some companies, I think of Tractor Supply, Ford and others who have said, hey, we're not going to do this because there is this association with saying we're only going to hire people and we're not going to do it based on who's the best candidate.
Yeah, I think ultimately you have to. If I'm a leader, and I won't comment on the value of their decisions, those leadership teams made the decisions for their businesses, But I harken back to, what is your company's purpose? What are your values? Who are your most important stakeholders? And what I would advise companies, which I have done in these situations, is to be sure that as you make decisions that impact one set of stakeholders, for whatever reasons, you're very clear about your priorities, and that you communicate very, very heavily, right? And that's something I think that we can all do better, companies can all do better, is, there has to be a sense of priority as it relates to who your stakeholders are, and inclusively, you've still got to address all the people who are important to you in your ecosystem for your business.
Ann Chow, she's the author of the new book, Lead Bigger. Thank you.
Thank you so much.
It is 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan. Andrew is on assignment today. Some breaking news for you. Southwest Airlines Executive Chairman Gary Kelly will retire from the board effective immediately following the 2025 annual meeting. That comes after pressure from activist investor Elliott Management. Southwest will also decrease the size of its board to just 9 members. That stock right now up by about 12 cents. The European Union's top court ruling that Apple must pay 13 billion euros in back taxes. That stems from a long-running lawsuit over Apple's tax affairs in Ireland. It goes back more than a decade. That announcement came just hours after Apple unveiled its latest suite of smartphones. Alongside several versions of the iPhone 16, Apple will make its first set of AI features known as Apple Intelligence available in a free software update next month.
Vice President Harris's support for a tax on the unrealized capital gains of the richest Americans is the subject of a Wall Street Journal op-ed. You would pay Harris's wealth tax, warning of a potential negative impact to all investors. Joining us now is one of the authors, Hal Scott. He's a Committee on Capital Markets Regulation president and a Harvard Law School professor emeritus. And the journal, it's in the journal today, Hal, on page A15, and it's kind of a short piece because you didn't really need a lot of data, and you don't go into a lot of the philosophical concerns about, or actually the logistical problems with trying to affect something like this. You purely go to the notion of what it means to be at $100 million of net worth. It's not possible to just go after those people. Everybody would be affected, and I want you to explain why.
Well, basically, Joe, it's because there would be a lot of selling pressure in the market. These billionaires who hold something like 66% of their wealth in public companies that would be affected by this would have pressure to sell to fund the taxes. So that would be putting downward pressure on the market. Additionally, why would you be public and then be subjected to this tax? So this will lead to additional shrinkage of the public market with corresponding growth of the private market. And the retail investor can't get access to those private markets because to invest in a single private company, they have to have $1 million in wealth, and to invest in a fund of private companies, they need $5 million. So they would be highly negatively affected by this wealth tax.
There's as you point out in the provision, there's an exemption for ultra-rich investors who have 80% of their wealth in these illiquid assets. Since 1996, there are 8,000 public companies in the U.S. Today, there's 5,000. I can't imagine very many companies that would want to stay public if they would go after this exemption. And I don't know where you'd be down to in terms of public companies. They'd all go private at that point. And that's your point. No, there'd be nothing to put in your 401k.
Well, there'd be a lot of, I wouldn't go so far as to say they would all go private, but
well, they wouldn't come public. All the best companies would not come public, would they? They'd either go private or the best Silicon Valley companies would not go public.
Well, you'd have to get, the consent of the shareholders. I think it would be clearly those companies where founders had a major share of the stock, those would all be easily go private. More just as importantly, no private company would have the incentive anymore to go public. So all of these factors reduce the size of the public market, which is the only market in equities or debt in which the average investor can invest.
It's not good, perhaps, when you talk about income inequality, but that does rear its head when you talk about these individuals that have $100 million or more, because that brings you to the billionaire class that owns more than $5 trillion in stock. That's 7% of the entire stock market. And then a lot of that would have to be really reevaluated. This is not just a one-shot deal. They'd have to do that every year.
Exactly.
Every year. So there'd be selling pressure on hundreds of billions of dollars of stock every year from this.
Couldn't say it better. You're exactly right. And, another thing that I didn't really have time to go into in the op-ed is that, our public market is the envy of the world. Although it's been shrinking and its competitiveness has been decreasing, it's still really important. And, that jewel of our financial markets would be under a lot of stress as a result of this. So quite apart from, the impact on the investors, just the fact that our public market, which is really important to allocating capital, et cetera, would be under continuing pressure to decrease.
All right, very good. Well, as I said, this is one. I don't know whether we showed it. Do we have a shot? That would have taken a lot to actually get a shot of
What's
this.
that, John?
Preparation and everything. We don't want to produce it or anything. Oh, there it is. We do have it. You. Okay. I wanted to show it again. Thank you. Hal and Squawk Box. We'll be right back.
Women.
A number of changes happening at Southwest. Some breaking news this morning. Let's get over to Phil LeBeau. He has more of the details. Hi, Phil.
Hi, Becky. These changes announced by Southwest Airlines following a meeting yesterday between Gary Kelly, who is the executive chair of the Southwest Airlines Board of Directors, along with two other directors. They met with leaders from Elliott Management, which, as you know, has now essentially a 10% stake in Southwest, and has said that it will call for a special shareholder meeting unless there are wholesale changes at Southwest, both in terms of leadership as well as how the company is operated. We see some of the changes that Southwest has agreed to after this meeting, including Gary Kelly retiring as executive chairman at the end, once the annual meeting happens in the spring of next year. 6 directors who are currently among the 15 members on the Southwest Board of Directors, they are going to be resigning at the board meeting in November, and Southwest is also committed to considering Elliott's suggestions, the candidates they have put forward for 4 new independent director positions. That may sound like a lot, but there's a couple of things that also came out of this meeting that may not be enough for Elliott, including Southwest reiterating its support for CEO Bob Jordan, that he is the right person to lead the airline. As we have talked about for some time, Elliott Management has been emphatic from the beginning that Gary Kelly has to go and Bob Jordan has to go. But clearly from this announcement from Southwest Airlines, it believes that Bob Jordan is the right person. So all of this sets up the question of whether or not Elliott Management comes away from this meeting and says, that's a step, it's not far enough, and as a result, we're going to call for a special shareholder meeting. That's where we are today, guys. Not a whole lot of reaction from the stock initially on this news, but the big headline here is that Gary Kelly, who has been just a driving force at Southwest Airlines as CEO and now as executive chairman, he is stepping down at the annual meeting next spring. Guys, back to you.
Yep. Interesting, Phil. A driving force. Okay. Just trying to figure out which way we were driving for most of the
Well,
period.
you could make that argument, Joe. That's the argument from Elliott. Elliott's argument is they have wildly underperformed, particularly over the last several years, and as a result, they need fresh blood, fresh ideas, and they're not moving fast enough.
Right. Driving it right into the ditch, maybe. All right. Thanks, Phil LeBeau. Coming up, Google and its legal trouble are in focus. We're going to ask Kentucky Senator Rand Paul why he's against a recent antitrust ruling against the company. Then later, this hour, hedge fund manager Kyle Bass and former SEC chairman Jay Clayton, both are going to join us on U.S. tariffs targeting China. We're going to go in a time capsule and go back to when both of those guys look like that. Stay tuned. You're watching Squawk Box on CNBC.
welcome back, everybody. The latest on Google's legal challenges. This morning, Europe's top court upholding a $2.6 billion fine against the company for favoring its own shopping competition service. Yesterday saw opening statements in a U.S. trial over whether Google holds a monopoly on online ad technology. And then there was a judge's decision a month ago declaring Google's search engine an illegal monopoly. Kentucky Republican Senator Rand Paul came out against that decision. In an op-ed for the Washington Examiner, he said that while he doesn't prefer Google's search engine, it has achieved market dominance because consumers like it. Senator Paul joins us this morning, and Senator, thank you for being here. We've been taking a very big look. Good morning. We've been taking a big look at how big tech companies in the United States are being so heavily watched by regulators here in the United States and in Europe and beyond. What's your thought on what's happening here?
You know, most antitrust policy in the United States is misused and abused. What you have is basically it becomes a cudgel for disgruntled competitors. People who are not succeeding in the marketplace want to use the law to beat up on someone who's beating them in the marketplace. For example, if you look at advertising, Google does have a large share of search engine advertising, but what is their share of all advertising online? Not so big. But they also compete with newspapers, radios, television, billboards. Advertising is advertising. So for the antitrust case to say, well, they have a large share of Google or of search engine ads, that means nothing. It's basically somebody who doesn't understand the real marketplace and the real competition. But the other problem with antitrust policy, for the most part, is there's no proof that Google is charging outrageous sums and charging above and controlling the market. They just say they have a lot of the market share. And this has been the problem with antitrust policy going back to Standard Oil. It didn't have so much to do with the price or gouging the consumer. It just had to do with market share. And I think market share shouldn't be regulated at all. I think it should be based on the consumer. And this is something we've gotten away from now, and it's a nonsensical economic policy. But it's a mistake to break up great American companies because what they'll be replaced with is companies from other countries.
You think that goes for, let's say, the antitrust case against Microsoft and others as well, AT&T?
Absolutely. Absolutely. And I think some people get misguided by policy. You know, I mean, some on the right hate Google because of their left-wing politics. I don't particularly like them. I try to use DuckDuckGo because I don't like the policies of Google. I don't like them just, you know, putting to the forefront on all the algorithms left-wing politics. But at the same time, I don't want my personal beliefs to get in the way of interfering with a company's right to grow. I mean, listen, linking their product, linking the search engine to people who sell computers and phones, that's just good business. We're going to penalize them for trying to be good at business? That's insane, and the government should have no role in preventing people from trying to increase their business.
Senator Paul, you are such an interesting person right now in Washington. There are very few people who we talk to who are looking at things not in a very partisan manner at this point, especially because we are just, less than 60 days from the election at this point. I really appreciate how you look at every issue on a case-by-case basis and put it up against what you think is a logical test of things. You have not...
But here's Go ahead, sorry.
Go ahead. No, I'm sorry, sir.
I was just going to say that the mistake Google makes, and this is a terrible mistake, corporations should try to be nonpartisan if they don't want to piss off half of the country. Half the country's Republican, half the country's Democrat. When you do a Google search, if you search elections, 61% of the sources that come up are left-wing, 3% are right-wing. You can't tell me that's not on purpose. Now, do they have the right to do it? Absolutely. They're a private company. They have the right to be as biased as they want. But do you really want half the country to be angry at you? Why not try to have a fair search engine and publicize that you're nonpartisan? Instead, what they do is they are manipulating searches. But I don't let my personal dislike of their politics get in the way. It's like free speech. You know, I'm not for regulating speech. Even speech from the other side, even nonsensical, wrong-headed speech should be allowed. But people do need to take a step back from their personal likes and dislikes and talk about what would be good for the marketplace.
Senator, what do you think would have happened if Elon Musk had not bought Twitter? Where would we be getting, and Squawk Box didn't exist, where would we be getting actual unvarnished news?
I think it's extraordinary what he did. When he was asked, why did you pay $44 billion for Twitter? His response was, I didn't pay $44 billion for Twitter. I paid $44 billion to save free speech. And that's saying a lot, but I actually do agree with it. What came out is something that everybody should be aware of, is that the government was colluding with Twitter before Elon Musk to suppress speech. And this is a real problem. I have a bill that would forbid the government. I would never forbid Squawk Box or Twitter or any kind of media outlet from doing it whatever you want. You're privately owned. But I would forbid the government. Can you imagine after this interview if the FBI came to your office and sat down and said, well, we liked your interview, but what he said was against government antitrust policy and it shouldn't be aired? You would raise unholy hell about that. But the same should happen if they go to social media afterwards or beforehand and say you don't need to be interviewing Rand Paul about vaccines because he doesn't think kids should take the COVID vaccine.
If you watch the coverage of since Joe Biden dropped out and Vice President Kamala Harris came in, do you think that's been a normal sequence of? Do you think the mainstream media has fairly covered the transition to the vice president? Is that just
I think
ducks got a quack that it's just go ahead.
No, I would say most of the mainstream media are an extension of the Democrat Party, and that their coverage of Harris has been really soft glove and hasn't been probing. And I don't think it's been fair at all. And the boost that she's gotten has really been orchestrated by mainstream media. That being said, I'm not for regulating any of them. If you don't like them, change the channel. And so people need to get over themselves. And even people on the right who are like, oh, the left wing, they're controlling everything. There's never been more choices than. I grew up in the 1970s when the three networks were all left leaning. They were just more subtle about it. And now there's dozens of choices. There's cable, there's radio, there's podcasts. I think one of the phenomenons that underreported is how many people are getting their news from podcasts now. How many millions of people are skipping the mainstream media completely?
Senator, there's NBC News' Sahil Kapoor reporting that he had a conversation with you last night. He said that you're still not endorsing Trump, and you say your enthusiasm for Trump is flagging. Why is that?
I'm supportive of Donald Trump. I think there's no question that Donald Trump is better than Kamala Harris on this. And, one is basically an argument for socialism. I think the idea of taxing unrealized gains is not only moronic, it's so destructive that it should be disqualified. She should be disqualified from any thoughtful person considering her the fact that they would consider taxing unrealized gains. Are we going to tax my house? How am I going to pay taxes since my house is worth twice as much as it used to be worth? Where am I going to come up with the money? I mean, that's just crazy. But the same would happen to stocks as well. So, but as far as my enthusiasm, I'm a deficit hawk. The Trump administration added $8 trillion. The Biden administration is going to add $8 trillion. This year, we're going to add another $2 trillion. As Trump left office, he was advocating for $2,500 checks again, passed out to everybody. I'm not for that. I was against the lockdowns. And I want to hear stronger language in that sense. I also want to get to the bottom of the funding of the research in Wuhan. The NIH is still resisting giving me that information. My investigation hangs in the lurch. And I want to promise, frankly, from Donald Trump that he will continue, allow me to do that investigation, and that he will sign legislation that I've written that will regulate gain-of-function research such that we are not having government money used to, take Ebola, which has a 50% mortality, and see if we can aerosolize it. Crazy research like that shouldn't be done or paid for by the taxpayer.
Fauci's going to ride off into the sunset, though, don't you think? Nothing's ever going to happen, Doctor.
What, on reforming the gain-of-function research?
On the entire saga that in hindsight, just, in terms of trying to repress some of the lab origin, asking other scientists to go along with trying to say it probably didn't happen that way, having already funded some of the research. A lot of that, I mean, it almost reminds me of a Ian Fleming novel, and it's just go ahead.
Well, I wrote the book on this, Deception, the Great COVID Cover-Up, and in it we expose a lot of this. There's more to be exposed. The only encouragement I would say is, as we fought this battle, it used to be a fringe thing to be against mandates on healthcare. But we actually won in Congress, removing the mandate on our young military men and women to be forced to take a vaccine that really didn't work and they didn't need, the COVID vaccine. We actually won that battle. As far as the lab and where it came from, lab or animals, in the beginning, we were discounted and called conspiracy theorists. We were dismissed and no one would interview us, and we were actually taken off of social media at the best of government. That has changed now. Facebook admitted they made a mistake. Whoops, we, for a year and a half, suppressed any knowledge that this could have come from a lab. But now I would say if you interview scientists, it's closer to 50-50. If you interview people in the media, people from the left or the right, I think quite a few of them would acknowledge that there's a pretty good chance this did come from the lab. What I need to do is get people convinced enough, even if there was a 10% chance it came from the lab, wouldn't we want to try to prevent this from happening again? I mean, look at all this, people going crazy about microplastics in your bottle of water, but 1 million Americans died and they're not worried about this research going on at labs where they create viruses that don't exist in nature that could potentially wipe out millions of people, but they're worried about microplastic in the bottle of water? I mean, come on.
Senator Paul, thank you. It's good speaking with you this morning.
Coming up, former TD Ameritrade Chairman Joe Mowgli is going to join us on the markets in the spate of leadership challenges in college football. No. In this case, facing some high-profile CEOs on Wall Street. Maybe the other issue as well. Tell you on the break about.
When we come back, former TD Ameritrade CEO Joe Mowgli will join us to talk about the slate of challenges facing some top corporate leaders on Wall Street. Don't go anywhere. Squawk Box will be right back.
a lifesaver.
All right, everybody, welcome back. High-profile CEOs on Wall Street are dealing with a variety of challenges right now. We just heard Southwest Airlines CEO Gary Kelly is going to be stepping down, actually Executive Chairman Gary Kelly, following pressure from activist investor Elliott Management. Intel's Pat Gelsinger is trying to turn around a company that's fallen behind in AI. Starbucks' new CEO Brian Niccol is looking to meet customers' changing taste. NVIDIA's Jensen Huang is feeling pressure from investors, wondering if we've seen peak AI. And the new Boeing CEO, Kelly Ortberg, is working to pull that company out of a slump that began years ago with 2 plane crashes. Joining us right now to talk about corporate leaders facing big challenges, and of course the markets as well, is Joe Moglia. He is former chairman and CEO of TD Ameritrade and executive advisor to the president at Coastal Carolina University. Joe, leadership has been something you have focused on not only in your career on Wall Street, but also in what you've done with your football program too, teaching leadership. We do see a number of these crises that are taking place around the business world today. Got any thoughts on any of these situations? How you step up to these challenges?
Yeah, I think while each of those companies that you mentioned, Becky, have a little bit of a separate issue and problem. There are 3 priorities every CEO's got to have, every firm's got to have. It's all about your clients, your shareholders, and your employees. If you don't do a great job with your clients, you're not going to be in business. If you don't have a reasonable profit, you're not going to be in business. And you deliver value to each of those constituents through your employees. So you've got to get that right. The other piece of it is just real leadership. It's about standing up, standing on your own 2 feet, taking responsibility for yourself. You always treat others with dignity, respect, and live with the consequences of your actions. That's it. Now, what happens, I think, sometimes CEOs become enamored in terms of the way they present themselves in front of the board because the board's going to pay them, the way they handle themselves on television, the way they handle themselves in public. But you can have a sophisticated strategy that handles a lot of contingencies, but if it's not simple enough to execute, you're not going to get the job done. And what happens, they get away from those 3 priorities and they forget about the leadership principle where you are the one responsible. You're the one that takes care of your people, your clients, your shareholders, and you're the one that's got to live with the consequences of those actions. We get away from those principles sometimes, and when we do, we get in trouble.
Yeah, I'm thinking through some of those individual instances. Gary Kelly, for instance, maybe ran into problems because they weren't reinvesting enough in the company, updating things and modernizing things. You look at Boeing, some situations there where it was not enough attention paid to detail on the floor with making sure some of those come through. It's a lot easier to say it, though, than to actually do it.
Well, that's the reason why I said you can have a very well thought out, sophisticated strategy, and that sounds good in front of the rest of the world. But if that strategy is not simplified in a way where your people, whether it's 100 people or 25,000 people, can execute, you're not going to get the job done. Frankly, it's the same thing in football. You can have a sophisticated playbook, but if you don't have a simple enough game plan where 11 guys can function at once, immediately, in concert, without hesitation, you're not going to be effective.
What's easier to deal with, on the football field or in the world of business?
Both of them are tough. You got every job. I coached for 25 years. Every job I got, the guy before me got fired. So you got to get the job done in both worlds.
Yeah. Let's talk a little bit about markets right now and what we might expect to hear from the Federal Reserve. Markets have been near highs. This month's been a little bit rougher.
Yep.
Yesterday was pretty good, though.
Yep.
And we are expecting that the Fed is going to cut rates next week, 25 basis points or 50 basis points.
Yeah, I think if I were the Fed, I'm not the Fed, but if I were the Fed, I would go with 50 basis points. I think, we're 5.25%, 5.5% right now as far as the rates go. To go to 5 to 5.25%, I don't even think that makes a difference. It's too small, it's too minute. To go to 4 3/4 to 5% might make a difference. So why not be a little bit more aggressive now in the beginning? They get ready to take October off. Then they've got 2 solid months to get more data to see what the reaction is with regard to the market, the economy, inflation, labor. They have another month after that. So you got 2 solid months to be able to look at what they're doing. I would go with 50 basis points. I wouldn't even hesitate as far as that goes. The only time I might pause for a second on that would be, is 50 basis points too much right in front of an election?
That was what Richard Fisher, the former Dallas Fed president, said when he was here earlier this morning. You don't want to look political by doing it, and the other issue people have brought up is you don't want to panic folks. If you're cutting 50 basis points, does that signal that things are worse than maybe others on the street are thinking?
If you have a negative attitude, it will, but if you don't have a negative attitude, it won't. And I think Powell can explain that. Again, the bottom line is when we waited too long initially to hike, and then we did, we became very, very aggressive, and all that looked like it started to pay off. Everybody thought, the market said, oh, we're going to automatically start to ease in the first quarter. Well, that didn't happen, but Powell didn't say it was going to happen. Powell pretty much tells us what he's really thinking. So we've gone almost a year now from the time that he said, all right, we're done hiking. We're done with that. I think now it's time for them to ease. They know that. They're going to do that. So why not take a little bit of a bigger step rather than a baby step? And then just explain why you did that. And you got 2 months to evaluate the data. We don't have to panic and think we're going to go into a recession.
Joe, there was an article we were talking about in terms of taxing unrealized gains, but one of the things that did come out of the article was that there is $5 trillion of wealth that billionaires have in the public stock market. $5 trillion. Maybe some of it has been taxed along the way, but maybe very little of it has ever been subject to any taxation if you're a founder. This might not be the way to do it, to try to do unrealized gains. Is there a way, and should we try to find a way to get at some of that $5 trillion that's never been taxed? Then how would you do it?
You know, I think first of all, I don't know how easy that's going to be to do. Now I recognize there's $5 trillion, Joe, that billionaires have in the market. I recognize that. I think we got to find a better way to be able to do that than tax unrealized gains.
Right.
I can appreciate that being more and more of an issue. I think increasing the tax for people that are more wealthy to an extent makes a little sense. You increase it a little bit though. You can do the same thing with capital gains. You can increase it a little bit, but you can't go too crazy with this. And I think taxing unrealized gains is going to be a mistake.
What about a little?
Increasing the taxes incrementally, I think it's probably worthwhile.
The idea of, for people that never pay tax, take a big loan out, and they could take $1 billion loan out and buy a yacht, and write off a lot of them live that way. They die, it gets stepped up to their heirs, and so basically that amount of money has never been taxed.
Being a billionaire yourself, you certainly understand all those loopholes that you can take advantage.
I've seen this tactic before. You're putting it over on me, so I don't ask you how much money you have, Mr. TD Ameritrade.
You know what you could do?
What?
How about a value-added tax for situations like that?
That's a good idea.
You're trying to work your way around it, right?
Tax.
So if you're going to take out, you're going to take out a loan to be able to buy something special. Okay, you're buying something special. There could be a value-added tax on that. If there's a step-up situation with regard to your estate, you got to look at the estate thing maybe a little bit differently. But there is ways to get at it.
But we should be careful, probably, on how.
I think we got to be careful. But we can be thoughtful and be creative and still figure out a way to do it, like a value-added tax.
How long were you at TD?
19 years as CEO and chairman.
What was the market cap of that company?
When I began, it was $700 million. When we closed the deal with Schwab, it was $26 billion with $14 billion in synergy. So
see, that's what he was doing. He's trying to divert the attention to me, trying to deflect it on me, a poor journalist who gets up at 3:30 every morning.
I'm just proud of what we accomplished.
You should be.
As a football coach,
and I'm proud of your success, which may put you in the ranks of much more than our ranks.
Joe, thank you. Joe Magley.
Thank you both.
Thank you both. Up next, hedge fund manager Kyle Bass, former SEC chairman Jay Clayton, going to join us to talk tariffs on China ahead of tonight's debate. Stay tuned. Squawk Box will be right back.
it's better.
Taxes and Chinese tariffs have emerged as key issues in the presidential race. Investors hoping to get some clarity from Donald Trump and Kamala Harris on their economic plans at tonight's debate, including how any new policies could impact inflation. Join us now, Jay Clayton, former SEC chair and a CNBC contributor, and Kyle Bass, founder and CIO of Heyman Capital Management. You were in the, I wouldn't say in the Trump administration, but you were sort of SEC chair, et cetera. You could be in the...
Look, I feel good about the Trump administration.
Okay, you could be in the next...
I feel very good about it.
And you are, I think, I don't know, we talk about a lot of different things. You're a China hawk, no doubt. Do you consider either one of these candidates free trade candidates, Kyle?
So you're saying, do I support unrestricted free trade? The answer is no. Do I?
No.
No.
Okay.
When it gets
is either candidate of free
we're going
trade?
to talk about Chinese tariffs. We're going to get into issues of national security.
You think when you hear the one talking point all Democrats use against Trump is that he's going to wreck the economy with tariffs? You agree with some of these tariffs?
I agree with many of them. Notice that the 301 tariffs on steel and aluminum exist today, and the reason those were put on is defend our industries from a state actor executing non-economic transactions to try to put our whole industries out of business.
Across-the-board tariffs on everything?
Well, I think it's a great starting point. I think it's a starting point to negotiate down from. So I think it's an effective negotiating strategy.
So you don't think it's bonkers?
Yeah, let me jump in and say I agree. Tariffs are just one economic tool, but it's one of the few economic tools, in addition to sanctions, which are a little more circumscribed, that a president has unilaterally. And when a president is dealing on the world stage, economics, national security, they go together. And a president who says, you know what, I'm not going to use tariffs, is giving up a significant...
Where does he go wrong, Jake? Because does he go wrong by saying we're collecting taxes from other countries and we're making billions of dollars collecting taxes? Because that's not what's happening.
That is clearly not what's
Should he
happening
not
in all
be doing
cases.
that?
But it is happening in some cases. So for example, when China is dumping goods and you put a tariff on those goods, you are bringing the price back to the natural market clearing price, and we are collecting taxes for that.
Well, what you're basically doing is stopping consumption. People are not going to buy the cars if you tax them heavily enough with it.
You know what?
It's a punitive situation to say we're not going to get this.
Let's look at something that has happened in the post-COVID. COVID, we scrambled all the economic eggs in the world. China was our #1 trading partner. Kyle was here pounding the table saying that is really silly. They're number 4 now?
Yeah.
Because of the different measures we've taken across the board, tariffs, the USMCA, we have nearshored and onshored a tremendous part of our economy. What did we have? We pumped a bunch of energy. We're way up on energy pumping from before.
So you're in favor
COVID.
of things like the CHIPS Act and other things that have done too?
I'm in favor of understanding the complexities of the world stage and what is good for America. And when I hear somebody say we shouldn't use tariffs, I'm like, that is a tool that has been used very well.
What about the idea that you shouldn't think that you're going to get a lot of revenue raised from tariffs, that we are doing it as a punitive tool, using it as a punitive tool and saying, okay, we're going to change behavior, we're going to change things and make sure that we're not aiding people that we don't think are helping us or countries we don't think are helping us. But if you think you're going to raise a huge sovereign wealth fund that's funded by that's crazy.
Look, I think it's the revenue impacts are naturally short term because of the adjustments that I just talked about.
Right.
So that is absolutely true. But I mean, think about how much better we have come out of COVID because of our ability to use our economic tools. China's 4th. Taiwan just passed them.
Well, Taiwan just started exporting more to the U.S. than China for the first time since 2002.
Right. And it's Mexico
So
and
we're
Canada.
changing who our trading partners are.
And why is all of this? Because we have nimble energy. We're up 40% on gas from when Trump took office. We're up more than 1/3 on oil. And we have the world-leading tech sector. The 5 biggest companies in the world are our tech companies. And when the rest of the world printed money in response to COVID, much of it came back to the United States because of our leadership in tech and energy.
I mean, we really do hear equivalencies, Kyle, to the negatives of both candidates. We have on one side what some people think is not a great idea, and that is taxing unrealized gains, price controls, go down the list, raising corporate taxes. But immediately there's going to be whataboutism thrown back at the other side. Well, this lunatic Trump wants to put tariffs across the board on all that. Do you see how it's used in the
What's being lost in this argument? There's something that's really obvious to me that's not in any of these policy discussions. Foreign investors, whether you're the Qatari Sovereign Wealth Fund or the Saudis or UAE or someone in Asia, all the investments they make in America, whether it's venture capital or equity, or they buy stocks or they trade stocks, they pay zero tax. They don't pay a dime. A foreign investor pays zero. Why don't we level the playing field? Why are we going after American citizens that have worked so hard to get to this wealth? And we're talking about crazy unrealized gains taxes. I think that's insane. That will kill capital formation. But why shouldn't we tax the people that use our system to earn their wealth? Why wouldn't the playing field be leveled against foreigners? Foreign investors pay zero. It's actually hard for me to believe. And no one's picking this up. Why wouldn't we do that? Why wouldn't we do that before we ever talked about doing something else, taxing Americans? It makes no sense to me.
Right. What do you gentlemen expect for tonight, James? What do you expect? It's ABC.
I expect a little bit of what we saw from Chris Coons earlier today.
Mm-hmm.
Trump is tariffs. Tariffs are bad. He's going to increase inflation. From the Trump side, I think, emphasized that the pre-COVID economy, 3% growth, 3% real wage growth, 3% unemployment, all with low inflation, was the result of comprehensive policies. Hopefully we'll have a more substantive discussion than just tariffs are bad.
Yeah, I mean, again, we go back to this tariffs is bad argument where Trump put these tariffs on steel and aluminum. Biden campaigned on killing those tariffs, and they still sit there today because they had a national security imperative. That's why they're still there. They weren't enough on aluminum because China ended up putting our big aluminum smelters out of business. So to take this broad brush and say they're bad, just to Jay's point earlier about the complexity of the world, you have to target things when you're trying to protect industries from reliance on bad guys. It'd be like relying on Germany to make our ammunition in 1938. We don't want to do that. So we need to stop relying on China to help us with our military industrial complex.
In your view, Kyle, who would China prefer the next president to be?
I mean, I think that's obvious. They prefer Kamala.
Why?
I think because Trump's unpredictable, and Trump and his National Security Council were willing to really go levy these sanctions, these tariffs. Think about what Trump did in 2017. He had Iran buckle down to like $12 billion in working capital. Mm-hmm. You want to see sanctions properly executed? Those were properly executed. The sanctions on Russia right now, we sanctioned 10% of their oligarchs. We didn't touch their banks, and we let the energy business thrive, which is 60% of Putin's GDP. Like, we didn't sanction anything. Our sanctions on Russia are nothing burger. We need someone in the seat that knows what they're doing, that is willing to press the hard button. And the hard button's going to hurt. But so far, we haven't had anyone in there that's willing to press the hard button. When Trump was in there, he had Iran buckled down. And then all of a sudden, this current administration flipped and said, let's give them $100 billion. And you see what happened when that happened. Like, I don't think we have a cohesive foreign policy, economic policy, sanctions policy.
Yeah, and I'll go on the domestic side. Our energy strength and our strength in tech, and the fact that more than 50% of the world's capital gets invested from the United States, those three things, what I've heard from the Harris camp is skepticism of those three things. The Green New Deal is anti-energy. The taxation on capital gains is anti-capital flows, okay? And then in tech, the idea that that Lena Khan has somehow, bought into the European view that U.S. tech is bad. I mean, there's nothing has brought people out of poverty around the globe more than getting connected to our... India's entire strategy on pulling people out of poverty is connecting them to the digital economy.
And think about one more thing. We need to start acting like the power that we are. We are 4% of the world's population. We're 25% of the world's GDP. We have 45% of the world's capital markets. We need to start acting like we're strong and stop acting weak. We need to lead with strength like we used to.
There's a widely circulated view where I think I almost said former President Biden. So sad. Where President Biden said we will end fossil fuels, and at the time the left was like, yes, thank you, we're going to do it. now, because we're at maximum production, we're at new highs for production, they're all gratified that didn't happen, and now they actually brag that the Biden administration has brought us to the forefront of oil and gas production.
Let me give you a simple stat on that.
Have they not, though? Has not Biden?
It's amazing, because a simple stat on that. Gas went to $5.25 nationally on average at sort of the height of the COVID supply shocks.
Right.
It's now down to $3.25. That $2 delta is $600 million a day in people's pockets. If you don't understand that this economy,
Biden did not end the fossil fuel industry. We're at all-time highs.
Oh,
Right, but it's together. It's together. Like, look, I'm from Texas, so we have
the high prices are what
we have the biggest grid. We have the biggest electric grid in the country, 85 gigawatt grid. A third of our grid is alternative power today. Wind and solar produce a third of Texas's power, but every day at 7 p.m. we have a catastrophic failure of a third of our grid. The wind stops blowing and the sun goes down. To transition to all alternative power, I don't think those people actually understand the construct of the market. It's going to take decades. It's going to take 50 years.
And Joe, you're
it's
right.
going to have to be
there's
side
been
by
a huge
side.
reversal by the Biden, including hitting the SPR, right, to keep prices down. Where is the admission that that's where we really are, and that the Green New Deal was one of the silliest things we've ever heard?
Jay, thank you. Kyle, thank you. I got to say, we'll be right back.
All right, let's get a final check on the markets before we hand things off to Squawk on the Street. Right now, you do see some continued green arrows this morning. Dow futures up by about 50 points. You've got the S&P futures up by 16, and the NASDAQ indicated up by 67. Yesterday, we had green arrows at this time, and the market built on those gains throughout the session. So you finally saw a positive session after 4 down days for the Dow before that. Treasury market right now shows that the 10-year just slipped below 3.7%, 369. The 2 years at 365. Okay, that does it for us today. Tonight you have that presidential debate. We will be watching that very closely. We'll be watching the markets very closely, and the 30-year Treasury is the only one that's hanging in above 4% right now.
It's not at 9 p.m. We may not be watching that closely.
We'll see you tomorrow. Right now it's time for Squawk on the Street.
Good Tuesday morning. Welcome to Squawk on the Street. I'm David Faber with Jim Cramer. We're live from Post 9 at the New York Stock Exchange. Carl has the morning off. Let's give you a look at futures. We get started with trading 30 minutes from now. How are we looking? Yeah. What do you think, Jim?
Well, look, we were at 3:30. We look like it's going to be another really bad day.
There you go. How about that? Turn around a bit. Our roadmap does start, as it often does, with stocks, as you just see right there. Looking to continue a rebound from, again, that bad week last week, worst week of the year, in fact. Oracle is helping to boost the NASDAQ. We're going to spend some time talking about the earnings from that giant company. Speaking of giant companies, the biggest one, Apple, unveils its first iPhone designed for AI. Shares, though, under a bit of pressure this after the EU's top court ruled that it has to pay billions in back taxes. And a big board shakeup at Southwest. Chairman and former CEO Gary Kelly is set to step down. This, of course, amidst the pressure from activist investor Elliott. Jim and I have been covering that one for a while. We'll also talk about it's not just Kelly, it's 6 board members immediately. But let's get to the markets, Jim, and just sort of start there on this Tuesday after a rebound yesterday, given, again, what was a decidedly down week last week for the markets.
Look, I think last week the tone was, all right, we've had this huge focus on AI and the build-out, but perhaps we should be much more focused on the slowdown in the economy and therefore move toward owning the Proctors, the Colgates, by the way, like the General Mills's, healthcare. And that was the zeitgeist of last week. Now, David, last night, Larry Ellison, and I know we're going to get to it, let me just go there now. As I was saying to you last night, Larry Ellison basically sought to redefine the whole narrative and basically said, okay, well, those who think that the data center and the build-out are finished, he said, we have 162 data centers, but they're going to have between 1,000 and 2,000 data centers. So maybe that's not, we're not as far along in the build-out as we thought. And I think that, yeah, I don't know Larry. I know Safra Katz, the CEO, but I would say that in the annals of betting against Larry at any venue, big mistake. So I'm with Larry.
You and I spent a lot of time during many shows talking about data centers. I want to do it there. I want to share with our viewers some of the sound from the call. We don't have that quite ready yet.
No, we're definitely not ready. Are you kidding me? We got to go to other things.
We're working on it. We're working on it. We're feverishly working on that, getting that for people. But
I hope this sounded feverish.
Before we move into Oracle and get into the numbers themselves, obviously you can see what the stock is doing this morning. Any other thoughts in terms of the market? I mean, you come to Oracle initially because why? It's a tell for the market overall?
Well, because there's a big belief that what's going to happen eventually is that Meta is going to be finished building, and Alphabet's going to be finished building, and Amazon's going to be finished building, Microsoft. And what he says is, you're never going to finish.
You're never going to finish.
You're never going to finish. And because he says you're never going to finish, suddenly you can put a different price to earnings multiple on the hyperscalers. And by the way, I haven't mentioned it yet, but you know it gets the biggest one.
NVIDIA.
Thank you. Thank you for that.
You're welcome.
Larry Ellison basically endorsed the NVIDIA playbook. He talks about, look, I'll tell you something. I know we're really not ready yet to talk about Oracle, but
you know what? I want to talk about Oracle. I don't care if we're ready or not. We're going to talk about it because you've made it clear why we need to talk about it.
Remember, we're in Oracle world, David. In Oracle world, it's going to be Thursday. They're going to up, they're going to up numbers because Oracle world is just apparently a huge blast. But all right, so Larry Ellison is chairman, chief technology officer, and co-founder. David, he monopolized the conference call. He kept apologizing for it, and then he kept monopolizing it. And it was joyful, though. It was not dogmatic. He talked about, David, my absolute favorite part was what's going to happen with Meta. He gave me a use case. We've been struggling with use cases. Like, you know, yesterday...
Struggling with use cases for AI. Jim, by the way, let me just set the table here a bit because, of course, as you see, the stock is up. We're talking about Larry Ellison's many comments on the call, and we do want to get to some of those comments as well about data centers. But the company did post quarterly results that were above the consensus of analysts. They also announced a strategic partnership as well with Amazon Web Services.
Right. Very important.
And on from there.
Well, David, there's a moment, and I'm going to quote it. I'm not going to speak like in this stentorian voice of Larry Ellison, but he's talking about the future. And he goes, I was at Stanford with my son one time, and it took 3 people, 3 different physicians, to actually be able to find his x-rays. It's Stanford now. It's not a doc in the box. This is how you find the x-rays for Larry Ellison. You say, Oracle, please show me Larry Ellison's latest x-rays. It's a voice interface. You ask for them. You don't worry about it. How do you log on? Well, you look at the computer. It recognizes your face. It recognizes your voice. It knows you're the doctor, and you're authorized to look at that. And there it is, David. There it is. That's the future.
That's the future.
Well, right now,
When's it getting here, Jim?
Well,
it's going to take a while.
He says if you use CERN, the future is now.
But you're also going to have to build an awful lot of data centers to get you there as well.
Well, David,
and have
the reason I did this whole securities thing,
yes,
is because what is the fundament of a data center?
In power, without a doubt.
And
you
they're
know
going to
what?
be building nuclear reactors to fund data centers.
Actually, it's funny you mention that, Jim, because that is exactly what I wanted to focus on in terms of Mr. Ellison's comments on the call. And I do believe this is an important moment for our broadcast, because we don't usually get these things right. But let's take a listen to Larry Ellison on data centers and power.
You can't just build a data center. You also have to account for the energy and the transmission of the energy from where it's generated to the data center. And of course, the most efficient way to do this is actually build the power generation plant right next to the data center. So you transmit over the shortest over the shortest distance. And we actually have very senior people who are actually come from the utilities industry, as strange as that sounds, that are expert in doing this and helping us build these gigantic projects.
Did I pick a good one for you?
I think that's brilliant, because what's happened is that the grid is obviously not capable of handling all the power. When you start hearing that there are small form nuclear reactors actually going to be built, when you hear the idea of a gigawatt.
A gigawatt, we looked it up.
That's
talking about 750,000
homes
for a
data
year.
center. Right, a year for a data center. Data centers as far as the eye can see. Now, I want to compare that to a lot of the chatter last week, which says we're peaked data center. I did not feel that.
No, I mean the numbers that they're using here in terms of their build out, obviously they already has 162 cloud data centers live and under construction throughout the world. The largest, as you just pointed out, it's 800 megawatts, but they're talking about going to ultimately gigawatt data centers with huge 32,000 node NVIDIA GPU clusters.
There you go.
And he says, Oracle, we've been proven to be very good at building those.
Well,
and then he goes on to tell us about how they've got a whole team that is full of utility executives.
Well, no, I mean, remember, this is something that Jerry Parker, who used to, was the great Intel builder. Every single foundry was exactly the same. You could go to the Israeli foundry, the Irish foundry, they were all the same. So you could just parachute people in. He's doing that with data centers, but no people. Right, no people.
Right, he talks about it all having to be automated.
Because people are corrupt, they get sleepy, and they're no fun.
Everything's got to be. In fact, he makes a reference to Elon Musk's Starlink satellites as well. He's like, those have to be fully automated, and then he makes the connection to, and so do data centers.
And of course, he does mention Musk, because that's another thing you have to mention.
Well, he also owns a lot of Tesla, by the way, as we know.
Oh, right.
Remember that? Forget. By the way, Larry Ellison.
How young does he sound? Doesn't he sound like he's 35?
He's 80 years old.
How does
Larry Ellison's net worth today, judging from the 41.5% that we believe he owns, 1.14 billion shares. You can do the math. 172 or so billion. Just an Oracle alone. So he's quickly moving up the ranks of world's richest people.
His island's the best island I've ever been
By the way, has a deal, of course, to acquire Paramount, in which he's contributing $6 billion. His net worth today is more than double.
I knew we'd get to that.
More than double his contribution for the Paramount equity that he has. So.
Well, look, I wish I could somehow. There's like this whole cohort of people who know him as part of this company that grows 2 to 4%. It's a data center company. And that is so far behind them. This is a cloud
Bye-bye. Good morning, retail traders. What time is it? Oh, I got 20 minutes. Whoa! Looks like the SPY broke out. I got a 548.88 resistance. Resistance to break, 548.88. And if we do break it, I think we can see 552.88 sometime this week. I'll tighten it up probably a little bit below that. That's just the 200 on the hour. Oh. Oh, dang it. Oh, did I forget to share the room? Oh, shit. I guess I did forget, didn't I? I had YouTube on. That's how much I care about you guys. I sure did forget. It wasn't even on my mind. If I'd known that, I'd drove all the way back. Good morning, retail traders. Time for the sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the Momo. Good morning, Lulu, Luna, Mustang, Patrick. I am SB. Good morning. All right. So this is going to be support, definitely the 200 today when we pull back. Boom, right there. Right back at $5, another dollar dip. Bet you we dip down there at open. And then bounce back up and create a double top on the SPY. /ES broke out, yay. NVIDIA. how's this? I don't want this over here. I don't want it there. NVIDIA, Google's getting a lot of crap. PLTR new high. Tesla, I got called 220.91. SPY. QQQ. Hike. Man, I sit down and I yawn. I had so much energy when I was walking around. I'm gonna have salmon and broccoli today. So I might go in there right now and season up that salmon. I'll be right back.
The basics of what rest of the world, a little bit
Rest
more
of the
activity
world.
for central banks. We got the ECB coming up. I want to talk some Bank of Japan with you too. Let's start with Europe.
I shouldn't mock him. I love
So
him.
we've got probably one cut on tap this week here on Thursday, 25 basis points from the European Central Bank. And there's an expectation in the market for 7 more cuts by the end of 2025, taking the policy rate there down to 2% by the end of next year. Now, that's a big move after all we've seen with regard to inflation. But the market's expecting 10 cuts from the Fed over the same period. So not sure what this will mean for the euro versus the dollar, but it really is quite a steep move here. As you can take a look at this chart here, just showing where the policy rate and the number of cuts are headed. In the
F
coming
minuses
months.
are
The ECB
coming.
Showing no signs of slowing down, a very steady pace of
make up for
25
that.
basis point cuts. They're already well on their way to hitting those numbers.
Okay, so a 7 is like, geez, how much visibility do they have?
No, I mean, it's certainly not that much. That's what the market's expecting given the tracking inflation. We did get some labor data, which is sort of interesting. In the U.S., we obviously got the Friday's jobs report, but we're seeing that jobs report in the U.S. catch up to the rest of the world. We got UK payroll jobs data for August today that showed a loss of 59,000 jobs in August after a loss of 6,000 in July. So the job market is definitely softening there. The other jobs report we got on Friday was Canada's. There we saw a loss of 43,000 full-time jobs. So we're seeing jobs around the world, not quite outright declines in Europe, but getting there. Really showing that their central banks need to move aggressively. Bank of Canada has already cut 3 times in this slower labor market, this weaker labor market. I think we're going to see that. So maybe we don't get to 7, but we certainly get a more accelerated pace here, or a continued accelerated pace over maybe the next 6 months or so as the job market continues to soften.
And what's the main catalyst there, Jeff? How come there's so much conviction that they can go on a deep cutting cycle? Is there that much visibility for inflation, or is more the clarity on the weakness of the economy and the need for support?
Well, I guess it's a combination of both, because the weakness is now showing up on the services side of the economy. Services inflation beginning to come down, wages beginning to fall. We just saw that in the data we got from the UK today. Wage growth falling on a 3-month over 3-month basis. That's good news. So there's more confidence that service inflation is going to fall. That's been the stubborn portion of inflation. In fact, if you look at Europe, there's really no energy, there's no goods inflation, there's no food inflation. It's really all coming from services. So there's much more confidence given the softer labor market that that's going to continue to come down and justify a move all the way down to 2% on their policy rate.
Wow, okay. So their kind of early start to cuts, they're going to see it through basically continuation. Bank of Canada and generally the drop in rates that we've seen from central banks, U.S. kind of finally getting in line with our cuts. Then what type of reverberations do you expect that to have, Jeff, when it comes to either currencies or bond markets? Like, what's the significance of us joining in as they've already been on the path, and the possibility that we still could do 50?
Yeah, so it certainly suggests that the U.S. has a little catching up to do, and that could mean a slightly softer dollar as we take a look out, although some of that's already expected, right? I mean, the market is already baking in some probability of a potential 50 basis point rate cut. And as I said, a series of 10 cuts being already priced in for the Fed over the course of the next year and a quarter. So some of that's already baked in there. I think what's interesting is when you get to this point in the rate cutting cycle among global central banks, we've now had 11 of the 18 advanced economy central banks cut rates. This is usually the point at which you start to see global economic momentum begin to stabilize and improve. Now, the jury's still out on that, but if that's the case, you could see more cyclical currencies, like the euro, for example, start to perform better than the US. We've seen this in the past. Whenever we start to see this kind of turning point in monetary policy, we tend to get the PMI begin to stabilize and rise. All that tends to drive more money into cyclicals and more cyclical economies. And the US is still a bit more of a safe haven, so we could see that benefit the euro and the pound as well.
Okay. Dollar's been kind of chopping around down here at the 1-year lows, trying to hang in there. And it seems like it's coming somewhat down to the wire for the U.S. with 30% odds and 50 still in there. You're taking that thing kind of to the edge. It's been a while since we've been so close to a Fed meeting without a lot of certainty. And I do think that could get even more fun if inflation does something wild. Generally speaking, our own inflation picture versus the rest of the world, Jeff, there's reason why our central bank is late to the game, right? Is ours still generally a little bit more elevated?
Yeah, that's right. Services just being a bit more stubborn here in the U.S. because the labor market's been a bit stronger here in the U.S. So we'll see how that shapes up. So definitely that's going to be a factor. In fact, you mentioned the CPI reading we're going to get this week, and then of course the Fed meeting on the 18th when we decide is it 25 or is it 50, and what guidance do they give. But you've also got the 20th, which is the day that the Bank of Japan meets. Now, I don't expect to hike that day, but I do expect them to commit to further rate hikes, make it clear they're still on a path to rate hikes on that day. So you've got a lot of things lining up around that middle of the month period that could really drive currency swings. My look at the yen is that it could continue to rise. We've actually continued to see that over the course of this month so far. Even though the dollar's strengthened up a little bit versus the euro and maybe the pound, it's continued to soften since Friday's jobs report against the yen. Now, we haven't seen a further unwinding of the yen carry trade. That's maybe because speculators have gone from net short to net long on their yen contracts, but there's still some room there in terms of all the borrowing that's been done in yen over the years that could continue to unwind and continue to push us in a stronger direction for the yen. Remember, inflation in Japan is also tied to services and wages, and they're going up, and they're doing a lot to keep them higher.
Jeff, we're looking at this chart here of the yen speculator positioning. Seems like a big deal that it's flipped.
It's huge, right? This is a major move here to see an unwinding from a record number of short positions, 190,000, that's 16 billion, betting on a weaker yen just ahead of the jobs report last month. We get it. Everything completely whips around. We're on a net long 39,000 contracts going into this report, and nowhere near an extreme. So this could continue to build, perhaps, as more and more positioning gets added on here for a stronger yen. And maybe that's another one of the reasons why the yen has shown more resilience versus the dollar this month than we've seen out of the euro or the pound.
Wow. All right. So then I guess the potential for the yen, gunpowder sitting around waiting for, a bomb to go off, I guess that's over?
Yeah, that's right. So in the very short term, all that dry powder blew up, and we certainly felt that in the markets. But that doesn't mean there couldn't be a further move. Again, we could see a further move to the long side, though not in a panicky margin call way. But remember, there's also all these loans in yen. There's $1 trillion borrowed in yen and invested long in other assets. That could continue to unwind. We've seen very little of that come back. And then over the long term, the Japanese investors have a very, very big net investment position outside of Japan. They invest more outside than inside Japan. That money could come back, get repatriated as well. So there's a longer tail to this yen carry trade that isn't just about futures contracts. But definitely we've seen sort of the near-term powder get used up with that volatility we saw in August.
Okay. Jeff, the last point here is thinking about a market leadership, the way things shifted second quarter to third, the yen blow up kind of.
Okay, I'm going to talk about what I'm going to do here this morning. I'm going to chase it. If we break 548.88, we could get another buck out of it, I think. If we break 548.88, if we don't break it, I'm going to wait for 547 pull back. And on 1 minute, that 547 is definitely support. It's only 40-cent bounce, so I'm going to wait. And trade the pullback. Again, we're kind of jumping ahead of ourselves. Unless we break that 548.88, I might start. How's that sound? I need my face on that one. Oh, Bob, you're posting too fast. What the hell? What are they doing to Bob? Let me see if I can upgrade Bob here. Bob is now a volunteer and a contributor and an early supporter and a trusted person. Oh, I don't know about that, Bob. Yes. You can get on voice and tell you how much you love me. Today we got a new sponsor. What I had for breakfast, I don't know if you saw these, but I'll show you what I cooked and I had for breakfast. Oh, here we go. Damn, that went fast. I made some hamburger, egg, biscuit, cupcakes, kind of like for breakfast, protein with 2 slices of bacon. Let me look at the puts here right off the bat. I think we're up too much at open. Man, that happened fast. Set your alert above the 200. The 11th. Like the 553s have 900 calls on them. The 552s are moving up. Those are the calls at 552. And then the put side, I'm liking these 545s or 544s. Maybe the 543 if we knife. Okay, we got to see if 88 breaks. And be looking at the puts. If they don't, that's the 544s for tomorrow. Damn it. Up $100 on the put. We hit the 63. I still think we can come down more. $546. See if we get down here to this year's support level. $547. And the 63 is a solid support. It's got a breach out with a one body candle here. SPY puts scalping September 11th, strike 544 at 130. When we get down here, we might make about $50 a contract. Let's do it, Randy. Next support's right here. $547.66. All right. Man, I love these apples. I'll tell you what they are here in a second. We got a tweezer bottom. It might be a good idea to... Nope, never mind. We got another tweezer bottom. You gotta watch the tape. I'm gonna go ahead and take some profit here. We're bearish as long as we stay under the 63. Come on, drop. Ouch. If we don't hold that 200, I think we'll bounce off real good. The 9's crossed over the 21. Rookie traders are probably getting scared right now. They're trying to bring it up, but they can't do it. Somebody tried to pump it up right there, and they couldn't hold it. So I think we got an inverted, and it's starting to look a little risky here. Yeah, I think I'm going to take profit. I got out 152. Off to the beach. We're still bearish. But not anymore. So 552s, calls. Not in them yet. Calls ain't paying much. I mean, I'm not in them, but NVIDIA's up $1. We're pulled back here to the 200 NVIDIA. PLTR pulled back some. Somebody taking profit on it. BofA's security price raises price target to $50 from 30. Maintains a buy. That's Bank of America. Tesla hit my resistance. We'll get Amazon's up. Meta's up. Okay, watch some SPY here. Calls, I'm gonna see. See where we are. It's calls. I didn't jump in them. I should have jumped in them right there. But I'm going to wait here. Wait till we see if we come and do a double, triple bottom down here. $547.85. We did come back once. We could break out. We did come back once. We're squeezing right now. Boom! God damn it, I knew it. I knew it. We're squeezing right now. Boom! Could have got them at 120 to 135 and be out of the trade. Within about 10 seconds. I'm also going to try to make a mustard sauce for my salmon. Oh. There's the pop. Meta's up more. We've got a flag on SMCI. We got coin down 271. Coin's got a double bottom. Uh-oh. SPY alert. SPY says it's going up. Need to get my water. It's taking its sweet time. I think we're going to pull back. We didn't want to break that high. We got a lower high, and we could have a lower low, and eventually hit that 547.19 for calls. Now there is a couple good size. I ain't gonna fall for it. Right now we're at the VWAP. We'll see if we bounce off the 200. It's retesting the VWAP for the third time. See if I can get this SPY call cheaper if we get down there. Right now it's at 120. Got 10 on order. I don't need two tapes up there. $200 SMA is what we're looking for. IWM's at support. The QQQ's at the 200 SMA. We have double bottom on the SPY. With lower, we're going to find out any second here if we're going to break out or not. We got a 1, 2, 3 bits. Descending flag. Not quite a bull flag. And the SPX can drop and hit the 63 for support. We got a 1, 2, 3 bits. And we broke it. We did break it. And the IWM is at support, descending triangle. And the QQQ broke out. It broke the 1, 2, 3. Things are moving a little slow this morning, so we just got to be patient and wait. Or you might just get stuck. We just had too big of a breakout this morning, I think, but okay, here we go. I could have took that for 140 from 117 to 131. I gotta go get my water. Up there goes the QQQ and the SPX. Same old tunes, fiddle and guitar. Same old tunes. I'm going to move my 547 alert above the 200 there. We can probably get these calls for under $1 if it pulls back. We're going to know real fast here. I think we're going to pull back and have another crow. That'll make... Can we have 3 black crows? Here we go. Get ready. Boeing's dropping. Yeah. I walked 6,000 steps to the grocery store yesterday. That's 2.5 miles round trip. I was quite proud of myself again. I think I've done it a few times here lately.
Good. How are you doing this
They
morning?
tried to reverse it here on that third crow, and then it gave us the last crow here. So I'm going to jump in these calls at 112. We can hit the 200, but I'm going to get in these babies at 112. Okay, we're at 110. I'm gonna wait.
I just got in with you too. I'm at 111.
Move this up a little bit. Still think we can hit that 200. You can get, oh, there we go. I got 5 here at 112, and I'll get 5 more down here, or maybe 15 more if we hit the 200. Monitor my blood pressure on this trade here. Just ate that apple. But hey, come up for number 4, you hoe. Heard it's not good to cross your legs when you're taking your blood pressure. I feel very tired. I don't know why I've had so much energy this morning. Yeah, see, it's low. Might have to take off. I got one high blood pressure pill. I might just stop taking it for a couple days. Damn, puts. Okay, here we go. There it is. This machine ain't doing a very good job today. Damn. Hit that bottom at 497, 546.97. That's kind of what I said we'd pull back to, that 1, 2, 3 triple top. $544s ran up nice. Puts went to 180. So I left 300 on the table there. .92. So I got 20 contracts at 112, $1.92. Same old tune, fiddle and guitar. Could get out right here. I'll be very happy. But I'm going to see if we break this 1, 2, 3 Forbes. We got a triple top up here. And we got a quad top. So it'd be a good exit idea. Randy? We got an average of 102. We've got a right shoulder down here. Damn it. I should have got out of that 112. 119. Fuck. Fed bar says purpose updating surcharge in the account changes inflation economic growth under the proposal. What's this here? Together increase capital. China exports rise. Well, I don't know. I just have to hold it here for a second. Wow. There's no holding back on this. Dadgum, them 544s are now 224. I could have made a pretty penny on that one, $1,000. Something pissed somebody off. I got 544.71 next. We got a head and shoulders right here. Okay. So I'm down 600.
Jim, I'm in this trade with you. Are you gonna start buying down, or probably gonna cut your losses?
Might have to take that blood pressure again. Okay, I'm gonna grab some more right here. I got more calls than I probably need. .70. You won't believe how many calls I got now. I'm down to 86 cents. I got $3,400 in the trade. If I don't hold this here, I might just get out. A lot of volume coming in. We break the 9. Target's going to be the 21. Probably might be a little green there. Then I'm going to start lunch early. I want to fast the rest of the day. I got to start fasting 16 hours a day. I think I'm going to get out even here, or ahead. Especially if we hit the 21, I'll be real green. I got a lot of contracts, more than I want. Come on, get above the 9. I doubled down too much at that one point. Should have waited. Break it. I am almost even. We've got a gravestone candlestick. Not yet. Inverted hammer. There's gravestone. I'm 6 notches out of the money. Some good. Was good. Damn, come on. Pelotar, Rebel Tech Giant, transforms into Frankenstein monster powered by Freak Show Leader. What the heck? Who in the hell wrote that? Are you calling Jewish people a freak show? I wonder who wrote this article. Well, they went into a lot of stuff here. Benzinga. Oh, there we go. Snake breakout double bottom. Let's see if we hold this right here. Well, the analyst thinks it's bullish, but I don't think that's a good title to be going on PLTR. We just got an itty bitty higher low, but not much. Not a complete double bottom, but I mean just a little bit. Breakout. Okay, we got a double top out of the snake. If we break that 546.23, I think we'll break the 21 EMA. Tesla's having a good day so far, pulled back some. There's 86, I'm even. Break it. I'm even right now. I can get out of this trade and save me a lot of headache. Yabba dabba doo. We're at 92. Now that I'm bullish, I don't know what to do. I got a lot of contracts. I don't know what to do here. If I hold on to this sucker and it breaks out, I've been sitting on these trades and getting out early, and yesterday could have been a $15,000 day. Now that we broke out of the double top, I just got to be patient here. Pick my nose. Or do a Samantha. Bewitch. If you don't know who I'm talking about. Was his name Daryl? It would be great to have a wife like that. So we're getting ready to squeeze again. $92, breakout, come on. One more little candle. Ah, give it to me. 94, 96. Okay, I'm going to take profit. So I got a lot of contracts. I don't want to take them. I don't want to fuck this up. Randy, give me a business decision now. Randy. Randy, I need you. Okay, I'm out. I couldn't wait any longer. I'm going to keep 10 contracts. You're too late. Unless, oh, maybe I didn't see your message. Damn, that was nice. Completely all out at a buck. Woo! That was tough. That was hard. Usually it's a little more simpler than that, but damn. 40 contracts. I had to definitely was in my outer range of averaging in. I mean, I was definitely out of my range. Had 3,400 in the trade. That's about 33,000 at the most I've ever. I don't like to go over $3,000 on a scalp. $560. So I'm up to almost 700 right now. Okay, I'm gonna go get my food started.
For a bit lower rates, but I will say as a more forward-looking view that if the Fed succeeds with this soft landing strategy, even if it has to cut a little fast.
So I'm gonna show you. There's some people on YouTube asking me what I had for breakfast. I'm going to show a picture of it in the room and then I'll take it out. You've already seen it. I did a video on this. I might just put the video in there too. That's what I could do. So that's what I had for breakfast. That's a hamburger egg muffin with parsley, cheese, garlic. I had one of them and 2 slices of bacon. I'm not going in full bloated carnivore because they say it's not a real good idea, so I'm going partial. 3/4 carnivore and 1/4 sweet. But no carbs. None. No more noodles. Everything I make is going to be fresh. And this is supposed to burn my body fat compared to just losing it through carbs. Through what I was doing with the salads every day and the salmon and the chicken. With no bread. But now I'm going to make some bread out of avocado and out of cottage cheese. Still have dairy products in there. Not much, and I ain't buying no milk unless it's whole milk from cow grazed local farmer stuff. And I started doing a video series called Protein Palace. So you can watch what recipes I'm going to make every week and eat on while I'm on this diet. So watch it, hit the like button on that video when you get a chance. And subscribe. If you haven't subscribed yet, be sure to subscribe so you'll get them Protein Palace videos. And then if I ever get good at editing, or if I can find someone that can do it for me for a cheap price, or show me how to do it, I gotta learn how to do it. Man, I can't believe I got out of that trade. I was down quite a bit. It wasn't pretty. That was affected by news. This Fed's Barr says he expects, I don't know who this Fred Barr is. Fed's Barr. White House says Russia will likely use ballistic missiles because they are fast in hitting civilian targets. U.S. and allies will also designate individuals. What? God, I hate this fucking government. I do. All you gotta do is talk to them idiots instead of being so snooty. These wars can be stopped. We get her in there, we're going to get nuked. There ain't no doubt in my mind. SPX broke out too. I didn't think about trading that one. for a secondary. Wow, I gotta calm down a little bit. Check my blood pressure like Randy said. I had to do my math on that. If I'd have just about like 10 more contracts, I would probably never got out of that trade even. So I had to double down, and 40 contracts is a lot of contracts for me to have in anything, when I'm usually only used to trading 5 and 10 at a time. So I'm a little proud of it, but still yet, it was a hard one to work out of. We got a bunch of hollow candles. Looks like they're buying at the bid. Goat's milk? Yeah, I'd try it. No, I've not. Sucking it right out of the nipple, huh? I'm a goat. I should be able to get along with them pretty good. I just got to take a break after I do a trade like that. Your mornings are 10x when you work out. Were you able to get out of that naked boxer? That was a tough one. I'm going to go turn my skillet on, and I want to eat this lunch on time at 10 o'clock. And then fast. I'll probably have a couple olives tonight and some Greek. I'm going to start drinking my, oh yeah, today's commercial. Okay. So I went out with a carnivore diet. You need to get, everything has to be a good product. Has to be clean. And I like salt. So I've got, unlike any other salt, this is called Redmond Real Salt, Real Sea Salt. If you want good salt, buy Redmond. Perfect for everyday use. Redmond salt is a real salt from your kitchen table for all of your recipes. From a single source, real salt is Americans' only pink salt, mined in Utah since 1958. Professionals and chefs choose this salt for its minerals and flavor. Real salt from Redmond, my new sponsor for today. And if you want to use pepper, use white pepper instead of black. Redmond's is awesome. The senior moment vouches for it. Well, this is the first time I bought it, so I'll be using it. I just put some on my apples. I've never put salt on my apples since I was a little kid. They're sweet apples to begin with. You know, they're just as delicious without the salt, but I'm not going to overload on salt, but it's going to go in a lot of my recipes. So we're having a symmetrical flag right now on the SPX. Senior Moment's been using it for years, and he swears by it. It's not very expensive. I'm going to see if they have a finer course. I got a rough, so I definitely want to see if they have that. So I'm going to go into the kitchen. I'm going to cut up a lemon. I'm going to do a video on this. I'm going to take some pictures of how I cook my salmon. We got a 1, 2, 3 coming on the spy. Randy, a 1, 2, 3. Jesse says I'm right. I'm going to have a private session with Jesse. I used to do private sessions for free when I first started trading, and I didn't know near what I know today. So if anybody's really having any hard time, I'll do a private session with you on the weekend. It'll only cost you 50 grand. 10% of all your winnings. But it all boils down to chart patterns and candlesticks and being in the now. Like I say in every video, chart patterns, moving averages, and being in the now. That means you got to keep up. You just can't come in, take a day off, and then come in again and think you can start trading. You got to know what happened the night before, the day before, what's in the news, you know. CNBC, I listen to them in the morning. All I do is cuss at them. I started that race bait and shit again this morning. I don't think the market, money doesn't care what color your skin is. There's a song I used to listen to called The Greenback Dollar. I might play that this afternoon. Right now, I'm going to go into the kitchen and get my lunch ready.
Welcome back to Morning Trade Live. Stocks running into a little bit of resistance here as the
We got
Nasdaq
1, 2,
is still
3 coming up.
and most tech is working. Still have that big bid into Oracle, but we've lost a few other players. Joining me, Diane King Hall, our senior markets correspondent. Back with us from New York, and Mr. Dan Grant here with me in studio in Chicago, senior specialist retail trading. One thing that's happening here this morning, Diane, is the banks are getting hit pretty hard. JP Morgan's down 5.5% right now, worst performer in the Dow. There's a little bit of chatter happening at a bank conference, and JP Morgan's president talking a little bit about how some of the economic stresses remain. But boy, I mean, it's a pretty nasty sell-off here.
Yeah, it does look like that in terms of their reaction within the banking sector, because initially in the pre-market, banks were higher when you heard the news about the loosening of capital requirements coming, that they would be, 9% in terms of the cushion that's expected to protect against financial losses, et cetera. Those are all related to the regulations that came into effect after the Great Financial Crisis, the Great Recession, et cetera. So you'd seen banks getting a bid in the pre-market, but then you started seeing headlines come out of this conference, and Jamie Dimon seemed a little down. I don't know if it's downbeat is the right word, but the sentiments that he seemed to express just seemed to, kind of cast a shadow over some banks. So you're seeing, even though, JP Morgan Chase had said, top leaders there said that this quarter they're doing fine. They see a solid quarter for investment banking. But they said they see Q3 markets just flat to up 2% year over year. So I think some of the just caution that seemed to come out, or the tone that seemed to come out from
Now,
CEO.
I got to say something here.
Shadow over that sector.
I've been trading this market for over 20 years. And the people on CNBC were always in love with JP Morgan. JP Morgan's kind of gone a little bit flipped on him, because he's kind of standing up for the Jewish people. And he's not agreeing with this current administration on a lot of things. And that's got these guys on Wall Street upset with him now. Yeah, they'll turn on you like they did Trump. They used to have Trump used to be on here one day a week talking about real estate, and they loved him. Just like the View did at one time, and Oprah did at one time, and Hillary did at one time. She loved him. I mean, he went to her wedding. Now, this has all been within a 20-year span or longer. I still love the guy. Just because I loved him as a Democrat, and I loved him as a conservative. Well, the same thing's going on with Jamie Dimon. They don't want to listen to what Jamie Dimon has to say anymore. And the same thing with PLTR. He was backing the Jewish people, and all of a sudden they started talking nasty about him. So I guess my point of view, one day they'll like somebody, and then another day they might just hate you because you don't agree with their terms. They want to censor you. They don't have Jamie Dimon on the show that much anymore like they used to. He used to be on there every frickin' month. Every 2 weeks he'd get on there and give an update. You don't still love your ex? The point is, I still love my ex girlfriend that I lived with for 10 years, but she did one thing that pissed me off, and I just couldn't get over it. I loved her back in high school. I saw her 15 years later. I loved her then, although she put on a little bit of weight and had a different point of view. But I didn't care what she thought about back then. I just wanted her because she was sweet. It had sexy legs. But we broke up, and she messaged me the other day and said, Beppy's in town. I said, yeah, I know it. I got tickets. I still love her. Just because we went separate ways doesn't mean I have to hate her. Although she did me wrong. Don't ever loan your card to a woman if she says she's going out of town. That's all I can say. We had a 1, 2, 3 down here. That's right. You're not getting true information as a trader. You want to listen to the people that they don't want to get along with because they're trying to manipulate you. And they don't want to hear censorship, you know. Jamie Dimon thinks the same way he did 20 years ago, 10 years ago. They just don't want to hear it now. Same thing with Elon. They loved Elon until he got involved in politics, and then they couldn't stand him. So I guess the point is that they still give you valuable information. You just don't want to cut them off. It's like a stock. You trade a stock, and all of a sudden you're doing good, and then you get 2 or 3 bad hits on it, and you want to stay away from it. And I don't think you should have a grudge. I carry a grudge on stocks. I mean, I will not trade General Motors. And it boils down to them being bailed out 3 times by the government and being so in love with the unions. But there's been times I wish I would have took that dip, but I'm so biased I don't want to trade it. I haven't traded it 1, 2 times in 20 years. And the same thing with McDonald's. You know, they called conservatives assholes, and then it eventually popped up a little bit. And I had a grudge on Target, so I shorted it because they went woke. But I still traded it. Either way, and same thing with Disney. I haven't even looked at Disney lately. Same thing with Nike. Just because they went woke doesn't mean to take them off your watch list. Now, SMCI is a different story because it's just way overbought, and then the bad news comes in on it. So I'm not eager to trade this anymore. But I've held grudges on stocks and then not trade them and watch them pop, and I just go tell myself, God, stop it. You know, I would probably never go back to Laura, but I had a girlfriend in college that I lived with, or she lived with me, and I sponsored a baseball team, softball team, and I was out playing softball, and she went into I don't know what you call it, panic disorder, because she found out that I had a cannabis pipe hidden in the closet. So I'm sitting there playing baseball, and this guy comes running out in the middle of the field and says, "Your woman called me up, says she said something." And I had to stop and leave and go check her out and see how she stood. And when I got home, I had pictures on the floor all beat up, and she went into a panic thingamajigger, and from then on I knew I had to get rid of her, but I still love her. She was sweet. We got a Head and Shoulders here on NVIDIA. This was, and then I'm going to quit talking about the past because I'm getting little flashbacks. Hey, keep that off of my mind. It's hard when you love somebody and they turn out to be what they're not, or they have issues. I like you, Ken. Zuku. Okay, we've touched the shoulder the second time on the video. Golly, then big lots sold off right there. See, this is where I'd think about wanting to buy it. There's a lot of volume going on here. What's Tesla doing? Tesla came back and hit the 200. I got to get in there and make that salmon. It's now lunchtime for the fat cats. See what the SPY. What files bankruptcy? Oh, yeah. Wonder what the single life's like. Well, it can get lonely. You got to find some ways to entertain yourself. I mean, I've had a lot of women, a lot of girlfriends. I could have one right now if I wanted one. I'm single because I have epilepsy and I didn't want to have to deal with that in a relationship and have babies, and so I had pretty grand mal seizures and stuff. I didn't know if I was going to be able to live as long as I have today. That's why I never got married. Try to wonder what it's like to have epilepsy. It's not fun. Had to quit boxing, had to quit everything. Yeah. Okay. Had to quit baseball. I could have probably been a very good ball player. I'm not all that bearish on SPY yet. I think we're going to have a good day on this thing. But I don't like the bank's reactions. That's kind of scary a little bit. Let's see what this old man's got to say.
I'm not that, I know I look like Einstein, I'm not that smart. People I speak to are smarter than me, are saying that it is real money being put to work. Trillions of dollars going into AI. The Magnificent Seven, look, part of it may be irrational enthusiasm up to a point. We've seen that they loved it. When they loved it, there was complete abandon. They just bought it almost irrationally. And we've seen that over the last 2 weeks when they decide to not love it, when it's no longer the stock of the month, then they sell it really heavily. We see that with the market. The market is not very forgiving when it's trading at these record levels, right? We've seen that with earnings. You can come out with good earnings, good guidance, and the stocks will reverse and go down 50 points. It's not like in the older days when earnings would come out, stock was up $2 or $3. If they loved it, if they didn't like it, it was down 2 or 3. Now, if they love it, it's up 10. If they hate it, it's down 50. That's kind of the way the market's momentum's been working.
I'm trying to figure out too, now, you mentioned Dan Ives, right? And he talked about the tech revolution for Apple in particular. We saw the Apple Glow Time event, and there was a lot of things, I guess a lot of people expected a lot of things, but still very exciting developments. He actually just, over at Wedbush, raised the price target today to $300 on Apple from $285. Yeah, I mean, that's always been sort of, he has these bull case and whatever, but it's now in the prints. So that's one thing. So that's like the positive side. The negative side is, for example, Goldman Sachs CEO David Solomon is saying bond and currency trading is down 10% in the current quarter from a year ago. You know, and these financials are down today, and we're going into a lower rate environment. Do you buy different sectors? Do you say yes tech, no financials, or yes financials, yes everything?
You know, I can't really tie anybody down and advise them on what to do. I think if you look
Would
at
you
the
say
way
to
the
be
SPY is
invested
trading,
or not invested?
Oh, 100%.
I mean, let's back up.
There's no bad time to be involved in this market.
Would you put a majority of your money in to work?
You know, I would surely put at least half of the money in, and I would look at to get the most exposure of the market. Look, you know, there's that great tenet that if you put $250 a month into the S&P 500, I've heard a birdie say that it really does well over time, right? If you're 20 years old and you put $250 into the S&P, you know, you're going to have $1 million in 30 or 40 years. And
Bobber says to go into precious metals. And after he
That's
said that,
that whole mentality of the like the safety time, the type of thing.
You a fan of that?
No, I don't have a problem with that, but it's not particularly sexy. You know, I mean, gold moves like a turtle. Although it's had a really nice run, and look at crypto. That you know, I mean, look, everything is super volatile. As I said, all of these markets are not very forgiving, right? You have to look at the long game. If you're a trader, you kind of still. We have an academy, David Green and I. It's called Wall Street Global Trading Academy. We tell people that you need to, if you're day trading this market, you need to take profits when you can, not when you have to. If you're investing the long term, when these days that we have these days where you have these huge sell-offs, you should have a shopping list. Right? You like the story. Has anything fundamentally changed in the story? 3 weeks ago, we were trading
nice
at record
bounce.
highs.
right.
Now we've had 2 weeks of a bit of a fragile market. It makes sense. It's a bit of a technical sell-off. Plus a lot of, I think the Fed may have overplayed their cards, waited a little too long before they gave us what they wanted on that thing. But has anything fundamentally changed? I don't think so.
By the way, Joe Moglia was out today, former head of TD, and saying that Ameritrade, saying that he would love to see 50. There are people who would interpret 50 as, oh no, what's wrong? What is the Fed
I think
seeing?
more people would interpret 50 as oh no.
As the oh no moment.
Yeah.
So you would like to see what, 25?
I think 25 is legitimate. It's what the market's been waiting for.
Yeah.
But you know what? Things can change in the next 2 weeks. It really depends. If the market continues to sell off the way it is, then 50 may be appropriate.
You mentioned highs not that long ago. Will we see those again between now and the end of the year?
You know what? I think so.
You might not be optimistic.
I'm a forever bull. You know, that's just the way I am. And it's so funny. I was talking with actually Bob Pisani yesterday. There are those inveterate bears, right? And they've been right about, you know, they peek out from the cave, you know, every couple of months, and they say, I told you so. They came out in July, they came out in April, and they came out on August 5th. But that I told you so is not if they have been holding their position on the bear side over the last 3 years. They're in pain.
Did you buy in the pullback week last week?
So I love the fact that it's so funny, the mentality behind it. When everything was trading at its record high, things were too frothy. I don't want to touch it. I love the company, but it's too expensive. The minute it goes on sale and comes in 5, 8, 10%, everyone's running from the movie theater screaming fire. It doesn't make sense. Have a shopping list of the companies you like, the people that process the product, the profitability, and when they go on sale, started putting some money to work.
Yeah, so you think that those dips are opportunities.
I think
Last
they are.
but not least, we talked about the jobs report last week. We'll get CPI, PPI, and consumer sentiment this week.
Look, I could come up with a scenario of what I have an idea of what it's going to be, but how is the market going to react to that? I have absolutely no idea. I can be right on what's going to happen, but I'm completely wrong on the way the market reacts. The market is really has a mind of its own.
Yeah. Still like being a trader, broker?
The greatest job on earth. And I just hit 200,000 followers on Instagram, and I'm using that platform to educate, motivate, and inspire young traders to learn about the stock market. I'm living the dream.
And why not?
And I get to hang out with you.
Person and a lot of philanthropy that goes along with it. Peter Tuchman, great to see you.
Thank you.
Glad
Thanks,
you're
guys.
loving your work that you do. Good to see you. Peter Tuchman of TradeMoss. Plenty more to come here on Trading 360. Up next, the big three stocks, three technicals. Jessica and Skip takes us through the trades from Microsoft, Apple, and Amazon. Next here on Trading 360 on Schwab Network. The Dow's down 143. We'll be right back.
Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides. Charts 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Jessica Inskip, Director of Investor Research at StockBrokers.com. Good to see you both. Good morning. So we were just talking about the Mag 7, Jessica, where Mark Farber, who you may remember, has been just saying it's gambling to get into this group, thinking that they're overvalued overall. I hear is very real. And so there's a lot of folks with higher price targets than where we are now. Your first name you're looking at is Microsoft, and you are in fact feeling bullish on this name. Tell us more.
Yeah, absolutely. You know, the Magnificent leading from an earnings perspective, the entire S&P 500, less Tesla. I'll take them out of that, even though they're discretionary. I put them in tech in my mind. So they are see them as leading, and it's not necessarily gambling because of the profit margins that are there. But I love that comment. It's what makes a market. Microsoft, we actually haven't seen an AI release that's been jaw-dropping, that everyone's really just those images and those videos. And if you've ever played or really gotten into OpenAI and played with those large language models, there is